All right, everything looking good over here. About to get it started. All right, cool. Welcome back to the channel, Crypto Trend Trader, with our Sunday weekly market look ahead. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we got Sunday, 8 p.m. We're going to be taking a look at quite a few assets today. Going to rip down the line and see what this week has in store for us. And also going to talk about some conceptual ideas, a couple of opportunities that we're looking at for this week for potential trades. And we're also going to do a little recap on our, at this point in time, probably about last month worth of trades. And just talk about how those are working out, how those have worked out, and what positions I'm closing out, what positions I have or am taking profits in. And yeah, all that good stuff. So if you're new to the channel, make sure you like and subscribe. If you're old to the channel and you haven't yet, make sure you like and subscribe. But we're gonna go ahead and jump right in. What's up, brother? Good to see you in the chat already there. Assuming I'm coming through loud and clear. Okay, so let's take a look. Like always, we'll start over here with our 10-year TNX treasury yields. So we've done the big picture quite often on this one. Not a ton has changed since the last time we took a look at this, obviously, but we are in fact still bouncing that Fibonacci level. Got a nice strong move up here on our Friday close. We are coming out of the bearish control zone with a hard buy signal. The difference between this situation and this situation on the daily is when we were down here previously, we were below the zero line, which is good, but we had just flipped the slope over red. So typically, if you're below the zero and the slope flips over to red, this is much less reliable of a signal. As we're here, we're below the zero, we're below the slope, we have multiple green histograms in a row, and this red has had plenty of time to actually reset. So now the distance between like here and the red line versus here and the red line is much closer. So the likelihood of us being able to get enough energy to break above that slope line and then get continuation to the upside is much higher than it is in a situation like this. This is much more likely to fail. So definitely looks like we could have some potential upside movement on this coming into this week. I would not be surprised to see this back up here retesting that previous high at 1.7 this week. So we will keep an eye on that. There is still possibility of this head and shoulders playing out, obviously. And if we do break through that neckline at 1.7 roughly right here, we would expect a powerful move to the upside. And that's going to have like an inverse relationship to basically like a lot of assets, specifically like tech and NASDAQ. As the interest rates go up, we would expect things with higher valuations in comparison to like earnings or income, like high ratios or high valuations. We would expect those things to perform poorly, or yeah, pretty much poorly. So we're going to keep an eye on that, see how this plays out this week. And you know, we obviously have some key levels above our head here. Switching over next to the DXY dollar index. So we obviously came up, busted above the 200 exponential, came back down, found support on the 200 simple right here. The difference being when we did it right here, we had an extreme slope to the downside on the 200 simple. Now here we have almost a leveled out slope on the 200 simple. So if we stay here long enough, what we'd expect to happen is a move to the upside. Now what we're paying attention to though is we have left the bullish control zone. We're about to get that hard sell signal. Now we did something similar right here when we sold back off, and then we actually got continuation to the upside. So we have to pay attention. Is this move going to end up like this, where we sell back off to a key moving average and then get continuation? Or is it going to look more like this, where we get actual topping out and then we sell off back down to it? Now there's two things, once again, that gives me an idea is, typically once you cross above the blue slope line, you know, you'll get some kind of follow through. This is not meant to like trigger over and over again and switch back between red and blue. Now it can happen, but typically because of the settings, you'll see longer periods like of that trending move. So here, after we've switched over blue, we've done it from below the zero line. We crossed above this, flipped the slope back over positively, and now here we're up in the bullish control zone. I would expect more of a situation like this, where we get a sell-off, consolidation, and then continuation to the upside. So when we do get this continuation, also, obviously looking at the actual candlestick patterns, this is, bearish engulfing candle, obviously, is bearish, obviously by the name. And then a rejection above the 200 exponential moving average. And then we have a couple, like pin bars down here, which are pretty bullish. It's basically a rejection of lower prices. So as long as we're above the 8, we would expect continuation to the upside. We also have the parabolic SAR, a bunch of green parabolic SARs in a row. So, if we take that out down here at 91.5, that'll maybe tell us that there's possibility this is going to get rejected and we will see further downside. But as far as I'm concerned right now, this looks more and more like a double bottom situation right here. So again, we'll have to see what it looks like, how this plays out. But I would expect us to get up here to like that 93.166 and retest this previous high. There's also a lot of like resistance and support throughout this range as well, corresponding with like the moving averages here. We have the 377 and the 528. So, but if we do break above those, then it's basically like free sailing above our heads here. So we'll have to see what happens. And I'm sure that people will be jumping on the dollar train here. As soon as we get any further upside movement, all of a sudden everybody's going to be bullish on the dollar. So, and I'm sure there's going to be all kinds of stories about why things have changed, etc. So, so let's take a look at tech. Actually, I think I forgot to look at tech last week, or maybe we were just like, I think I jumped around and just never made it back to tech. So let's take a look at what's going on here. So obviously the Tesla trade was looking a little sketch there for a moment. Definitely was looking like it might fail, but overall ended up playing out quite nicely. We have hit our first target to the upside. Technically have broken through that resistance right here. We are in the red box area, obviously the sell zone. I did take profits at the top of the position right here. So that was a nice quick little 20% move right there. Congratulations on anybody else who's involved in that trade. I did not close the position, just took profits on part of it. And typically when I set up a trade setup, depending on if I'm expecting continuation or if I have multiple targets in mind, I will take anywhere from like 25% to 50% of the trade, like profits right off the top, and just lock those in. It's never a bad idea to lock in profits. I'm not the type of person who looks at profits I could have had and says, oh man, what a horrible trade because I only made 20% on half the position when I could have made 20% on the whole position, or vice versa. If this gets continuation back up to like $900, I'm not just going to sit here and say, oh, I only made 20% on half the position and I could have made 50% on the whole position, so that was a horrible trade. I just don't look at it like that. You have to think about your own mentality, your own psychology, and either, learn to trade according to that, or make adjustments to the way you think about these trades. Anytime I make a profit on a position and I have the principal back in my account to where I can trade it again in my trading account, I'm excited, I'm happy, especially when it's a quick little, I don't know what this worked out to, basically a 20% move in less than 2 weeks. I cannot be mad about that ever. What's going to happen next here? We're already coming back down. This is obviously a bearish candle, indecision candle followed by a bearish engulfing candle. We probably will come back down to 657, close the gap right here, and then retest our purple breakout line right here. After that, I do not know what's going to happen. A lot of this stuff still looks toppy to me, and we'll have to see. But as far as I'm concerned, this trade is done. This trade was a success. It's time to trail the stop loss or have a mental stop loss in place. In my opinion, now the next question is, where do you put that mental stop loss in place? Again, this is not financial advice, but the way I look at it is I look at it as the same risk reward as where I'm at right now. So what is my potential target going to be to the upside from where we're at right now? Well, if we take from the top right here and we go down to the bottom and we draw just a simple Fibonacci in place, let's make this yellow so we can see it pretty clearly. So what happened? We basically bounced the first time from our top to our bottom right here. We bounced the first time all the way back up. Well, first we got to 0.5 and then we bounced the 236. So we made it to the 0.5 and then we put in a higher low, and then we came up and blew through the 618, but we hit our target zone perfectly, at which point in time we retested the bottom of the range. So we put in that same low. So this is forming a descending triangle and still forming a descending triangle. From that point in time, what happened next? We came up here and, we basically made it a little above the 236 and then came down in and put in a higher low once again. And then we burst through that and we came straight up to the 0.5. So now the first time we topped out was slightly above the 618. The second time we topped out was above the 0.5. So what would we expect to happen here? Well, one of two things. It either sells off right here and gets rejected and it's just a lower high, or maybe it comes up here to the 618, gets rejected, and that's a lower high. Either one of those situations, the same situation to me. There's maybe a little meat left on the bone, but it's not going to change my decision about the overall direction. Now, if we come up here in our second scenario and we actually take out that previous high right here, then we have a high, then we have a low, then we have a lower high, then we have the same low, and then we have what? A higher high. So then you have to look at it as this high is the next important high if we take out this one. So what am I looking at now? Well, what are the two things that could happen here? This is either topped out and it sells back off. When am I going to know that this is topped out? And then if it hasn't topped out and we do get continuation to the upside, where is it going to lead us to? So now I'll look at it as another trade setup, and then we can look at, where I would want to have my stop loss to invalidate this trade versus where my next target would be to the upside. Well, my next target would be basically up here to meet that same high or to take it out. So, roughly another 10 or 11% would take me to that same high. So then I have to have at least 10% to the downside right here, less than 10% rather, because I want to have a 2-to-1 risk reward ratio. So if we move that down to basically if it finds support at the 382, and why am I picking the 382? Well, previously we found support, basically at the 236 and then got continuation. So is it going to come down here, find support, and get continuation? Well, no, I don't really like that, honestly, because there's a good possibility we could break through that 382, come down here, still put in a higher low at the 236, and then say continuation. So if we're just looking for the same high here, and we're just looking for support off the 236 here, that's like a 1-to-1 ratio. So that doesn't necessarily look good to me. So I need this to be basically a better target to the upside. So if we're looking at if that's going to make it to the 786 or potentially the 886 or a double top, then this looks like a good potential trade to me to take from this level. But as far as the stop loss is concerned, when am I going to know? So there's no trade to buy at this area, in my opinion. But we're already in a trade. I already have principal that's profitable in this trade. It's up 20%. So what do I want to do here? I want to make sure I don't just give it all back. So when would I give it all back is if I come back to my entry point. So I've already logged in some of my profits right here, but I don't want to just give back the rest. So when am I going to know this situation is a bust now and I no longer want to be inside this trade? Well, I think if we take out this purple slope line right here, we have a very clear, make it a little brighter. We have very clear descending trend line right here. And we have broken out of it technically. If we come back down and find support along this trend line and then continue to the upside, it's going to look bullish, especially if we take out this point right here. If it gets rejected now and we start selling back off, it's going to look bearish. So, a mental stop loss for me in this case would be probably somewhere around this zone between the 382 and like $633. So, at that point in time, how much of the profit am I giving back? Well, if I'm up like 20% in this position, I'm basically giving back 10%. Or half of the profit. So it's not ideal to give back any profit, but it allows me to stay in the trade with a large percentage of this position, hoping for or expecting more continuation to the upside as we've broken through like a key resistance. So hopefully that helps. We're still above the slope line, even though it's red right here. And, we are inside the bullish control zone here. So there's definitely a possibility for continuation to the upside. But now if we think about what the rates are telling us, the rates on the 10-year are telling us, well, it looks like we're probably going to go up on the rates. So if we go up on the rates, our tech trades are probably going to do bad. So I would expect this to more likely than not be rolling over here. But again, we'll have to wait and see, because this could get continuation to the upside and the tech trade could fail, and the rates trade could fail. So we'll have to see. But right now, this is like the key area I'm looking for to act as support somewhere around here. And you know what? I will put in so we can look back at this specifically. I would expect somewhere around here, or maybe not expect, but if this area is going to hold, I need like the 382 to like, you know, this descending slope line somewhere around here to hold and then get continuation to the upside. If we start to break through that zone, I'm going to look at it as a failed breakout, basically another lower high and the overall predominant, you know, descending triangle. And now, you know, this pattern has been going on since January. So, you know, at this point in time, we basically have, you know, what, almost 6 months of like sideways action in a bearish pattern. Well, what does that look like? It basically looks like distribution is taking place. Now, in the event, obviously, that we like, you know, can break out of this and, you know, start getting like continuation to the upside, that's fine. But more realistically than not, you know, the last 6 months in Tesla has been a you know, sideways to down. So what do we expect to continue happening? Sideways to down. So, but there we have it. That was a nice trade. It played out nicely. Now we can see, you know, potentially where we would want to, you know, our invalidation zone where we no longer want to be in this trade. We'll keep that little extra 10%, take our money out and just de-risk off of this position. And then we can go from there. Because if we're right and we got this entry right here and then we get continuation to the upside, it's great. If we're wrong and we give back all that money that we made and then we just come back down here to the bottom, well, we should have just taken profits. So the real question is at this point in time, would you rather log your profits or do you just want to be right and then, you know, hope that it goes to the upside? Me personally, I would always rather just log my profits. You know, this could easily come back down here. This could easily go sideways for another couple months. I mean, we could operate inside this triangle, you know, through like mid to end of August. And there's no resolution. We're now upside down in what would have been a winning trade and could get a better entry. So that's how I look at Tesla. But, you know, again, that's a successful trade. Here's our Pinterest trade. The entrance on Pinterest was off the retest of the 200 exponential down here. 32% potential to the upside. Still looks nice and bullish and looks very likely that we are going to make it up here to the completion of the trade. Again, this could just start selling off at any point in time. We are losing the slope line, which is strange considering like the strength of the move and the fact that like the histogram is well above it. We're still inside the bullish control zone. So, you know, there's not a reason to exit this trade currently. But, you know, if we were looking to make 32% on this and we are already up right now, you know, 25% on this, like, is there an argument that you could just take out the majority of your position and let the rest ride? Yeah, sure. But honestly, I would rather just, we're this close to completion now. If we're going to front run it, we can. It'll still just be another lower high. I would still expect a rejection here and then just operating inside of this range again. But again, you know, I would rather just take money off the table if this starts to show any kind of weakness. You know, if we start showing red histograms, if we start seeing a cross, looks like we're going to exit the bullish control zone. If we start seeing a bearish candle or two show up here. But at this point in time, you know, we're basically 5 to 7% from trade completing. And I don't even have another trade setup in place on this as I do not expect it to break out. If it does, maybe I'll still have a quarter or half the position open. More than likely though, probably not. Again, I would rather just log those profits. You know, it ends up being what, 32% in about 2 weeks here. So next is eBay. I did not enter this eBay trade. There was definitely an opportunity to enter the eBay trade when it broke back above the resistance right here. But you know, the difference is, and the reason that I didn't re-enter or I didn't enter this trade is because the clear break did not hold. If this level, level in yellow would have held, I would have gladly entered this trade. I would enter on the retest and then, you know, obviously be in profit right now from, you know, the breakout to where we're at right now. It's already up like 4%. But the truth is, when this area broke back in and we broke back underneath a key resistance that should act now as support, it makes me lose faith in the trade. And it looks to me like basically this is just going to get rejected and roll back over. Now we also have what's potentially developing right here is bearish divergence. It has not developed yet as we're still moving to the upside, and this can easily see continuation. But we already have a higher high right here than right here. We already have a high on our indicator oscillators right here, and we're much lower on the indicator oscillator here. So it's possible this turns into a bullish reset. They get continuation right here, and we just shoot up and get the measure move. You know, this trade setup plays out, and we potentially get up here as high as like $78. But to me right now, I'm not seeing enough from the chart that's telling me this is likely to get continuation to the upside. And also, when this level doesn't hold, it makes me skeptical, thinking we could easily get continuation back to the downside. So I'd rather take my chances somewhere else where the chart is telling me multiple yeses from multiple things, rather than one thing is telling me yes, we broke out, but then did we hold? No. So now I got a yes that we broke out, and I got a no that we didn't hold support. So now I got a yes that we broke back out again, but our support still didn't hold. So we have a yes for the initial breakout, and then a no for did support hold, and then we have a yes for we're continuing to the upside, and now we have a no for potential divergence developing, which would be bearish. So again, I don't like this. I did not take the trade. PayPal is still playing out nicely. We got the break from our descending resistance right here. This was a potential of 17.69% to the upside. 12% up already on this trade setup. We do have a second trade setup in place for if we break out from that previous all-time high, but there is also a high likelihood that we fail at the 786 or the 886, that we get rejected right here at resistance, and that this trade is done, and we want to make sure that we locked in those profits. So obviously in this case, it's already a profitable trade, so there's plenty of time to basically get out of this situation. What I don't like about this one specifically is we are getting rejected at resistance, which was previously support right here, and then we have the sell, buy, and then we're about to get the sell again if we show any kind of weakness from this. So this is basically just the divergence signal with a little extra chop in the middle. So, but it is all green histograms. We do have blue slope lines still, but I'm looking to get out of this PayPal trade in the short to near future. Now the difference between this one and most of the other charts we've looked at already is we had a high here, we had a low here, we had a lower high here, and we have taken out that lower high. So all the other charts we looked at so far in tech, they have failed to take out this high so far, as where this one has taken out the high. So this is showing more strength than any of the other charts we looked at so far, even though we still have not taken out the all-time high yet. So is it possible we consolidate in this range and get continuation? Well, 100%. And it's still showing strength on the indicator oscillators. Moving averages are all in the right direction. So, there's no reason to just bail on this trade just yet. It does look better than most of the other trades we've looked at. So next is Bumble. Once again, the Bumble trade performed absolutely phenomenally. Basically picked the bottom to the absolute T based on our measure move down here. Took a nice entry down here, and it's up over 42% at this point in time. It has closed above that key resistance. So now this is similar. We have broken through resistance. We want to see this now act as support. So we can just sit here and go sideways for as long as we want, but eventually we want to see this area hold and then continuation. If we break down below this blue line right here, it's going to look weak. Now let's look at our indicators and see what they're telling us. Well, we still have the blue slope line. We have a bunch of green histograms in a row, so there's no weakness at all on the TJD, TDMACD. And then as far as the jewel thief, we're up here in the bullish control zone. We're seeing continuation. We're still angled to the upside. It still looks very strong. No reason to think that all of a sudden this just has to top out, but we are getting to elevated levels that are unsustainable. We're up at 93 on the daily. So while this was a bearish chart and we broke down from it, it's not unrealistic to think that we could come all the way back up here to a key level. So we have a bunch of old Fibonacci's that were relevant before. Let's go ahead and take some of these out, and then we can get a better idea of what we're paying attention to now. So what we want to do is we want to fib from. So we're looking for potential targets as where this thing's going to top out at if it does not just continue on to the moon. So if we have from the top right here to the bottom right here, we made it to the 0.5, which conveniently was the exact point of our resistance turn support, which that's not a coincidence. We talk about that all the time, about 50%. When something does an IPO or a direct listing or something like that, I almost always look for an entry at a 50% sell-off from the high to where it's at. So, if it came out basically around $80 over here, or $70, $80 is where it topped out, I'm looking for an entry at $35 to $40, because typically these things will come out, run for a little bit, and then dump down and lose half their value. And then that's a good time to buy them once they've lost 33 to 66% of their value. So, split the difference right around 50%. So now here we have from the top to the bottom, we have retraced to the upside 50% of the move to the downside. And that's what our Fibonacci represents right here. So potential targets to the upside, well, we probably already hit the best target, which is this one right here. So, and then if we get continuation here, our next target would be the 618. maybe even the 786. But at that point in time, I would expect this to like be rolling back over and then come back down and try to find some support here before we get continuation. Do I think that's going to happen? Probably not. I think we're probably going to top out either where we're at now or at the 618. But each time we come up to one of these key levels, we're basically taking out like a previous swing high. So if this thing makes it up to $71, maybe I'll still have a quarter of my position open. You know, if it makes it up, well, I mean, it's all but made it to the 618. You know, I'll probably have still half the position open. I don't see anything in the chart right now telling me that I needed to just sell off this position and get out right away. So I have not, you know, specifically like closed this position off yet. But, you know, I'm at the point where I'm not going to get greedy. We're up 42% on this trade. So obviously things are going pretty well on the trades that we've been taking over the last month or so. You know, it's not a coincidence that most of the trades we're looking at right now are in tech space. It's very clearly has to do with interest rates and, you know, basically like the rotation of money into these different assets. So next we have Baidu. Let's talk about Baidu and Baba. You know, we specifically spoke about these two things for quite some time. I gave you my specific reasons why I like these specific trades and what I was expecting from them. I have massive targets to the upside on both these things. First is Baidu. You know, we were looking at the entry right here. Once we broke back above the support right here, we were talking about a potential second setup, you know, basically for our measured move target. Also to come back up to some of these key Fibonacci levels. We're going to run into obviously a problem or at least some resistance at the $200 range. It's a nice round number. It's also where we topped out right here. After that, I would expect us to come up to the 382 at 228. You know, but in all reality, I expect us essentially to top out somewhere closer to like the 0.5 to 618 range. So about 28% to 37%. I do expect that to be a temporary top though. If I'm correct about this situation, and basically what happened here is we broke down above that or below that long time support, broke down below that long time support, we broke down below that long time support, and now we have reclaimed. Let me fix this up a little bit. We have reclaimed that support line now. We are back above this blue support line. So, you know, while I'm looking at this as a potential like short-term trade, a lot of times what will happen is I'll take profits on part of my position if I see some weakness coming in, but this will turn into a swing trade, which oftentimes will turn into a long-term investment. If I'm correct about this trade setup as well, and you know, this is basically just the beginning of like a parabolic move to the upside, you know, and continuation, this could be like, this could be a really nice entry point basically, where we have essentially picked the bottom the same way we did on Bumble. And again, I don't often like to do that. This is still overall a bearish pattern and could easily fail. But if you get a nice entry at a value level like that, you can get away with a little bit more. Like, I don't want to say greed, but like you can take a little more risk when the reward is so much higher, as opposed to buying a breakout where you're like, I can't afford to take any risk because, you know, the reward is poor because there's a very high likelihood this thing just rolls over. But if all of our trades that we looked at so far are like 3 or 4 or 5 to 1, we can take 5 of these stabs and we only have to be right like once or twice and we're like extremely profitable. As where if you try to buy the breakout and you're looking at like, you know, 1-to-1 risk rewards of like breaking out the top and then all of a sudden it sells back off, you might get taken out of that trade and never even get a chance for the upside. So Alibaba is next. So Baba looks a lot the same way. We have this long-term green trend line that has been in effect since basically our bottom back here in 2015. You know, and then we have a very clear 5-wave structure developing. We're coming back down and we have retested the 1 of the macro with a 5-wave structure inside of it that's making up the 3. This is very similar to the deep dive we did on Bitcoin before. We were talking about how the 5-wave structure of our entire Bitcoin life cycle might actually just be one wave of a larger 5-wave structure. So in this case, the 1 has completed, the 2 has completed, and then this 5-wave structure in green was the 3 completing. You know, in our Bitcoin chart, we were looking at basically our last 3 halving cycles, you know, as like the 5 waves inside of our wave 1. So that would be like us coming up here to the 1, and now we're getting ready to go in a sustained bear market. And then after that, our 3 is the move that's going to take us up to like, I think it was like a couple 100,000, and then the 4 would be a long pullback right here, you know, maybe 12 years into the future, and then finally 12 years from then we get our wave 5. So we're potentially now entering into the last wave of a very large structure here, which obviously we found support here so far at the 1. So this could be once again like an epic entry, which if we take a look at this based on our Fibonacci extension targets and new all-time highs on Alibaba, we're looking at either $400 is the 1.618 or 2.618 is $626. So if we pay attention to our entry down here, roughly like $200, that's like 100 to, what was it, 100 to 200%? Yeah, 190%. So we're basically looking at 100% upside to 200% upside with a potential risk of like 16 or 17%. So if you look at the risk reward ratio on the first trade setup, it's 5.48. If you look at the risk reward on the second trade setup, it's 11.36 to 1. So, obviously we're risking, let's say, $1 to make $11. It's kind of like the way you look at it. So that's why it's so important to use things like risk reward, probability, and position sizing, etc. So yeah, so far this looks good. We have basically broken out from what could be potentially this red resistance, but it is possible we just have like poked out the top and we just get rejected and come back down. Still is overall a bearish pattern, but there's a strong argument that this is a good buy zone, and we do expect continuation to the upside. So also, what was the other thing I want to talk about on this? I don't know. We'll have to see how this one develops in time. I do expect this to move slower, and there is a lot of resistance above our heads. So maybe we'll be looking to take some, profits at some of these areas along the way up here. But again, this might just look like something that starts off as a little bit of a scalp trade and turns into like a long-term swing trade, or like an overall like position that goes years into the future. So NEO. Looks like this thing's getting ready to top out up here. It is still consolidating. We did get the hard sell and multiple red histograms. Unfortunately, I did miss this entry. I had the entry set up at 29.65, and we only got down to, what was it, 30.66. So we missed about like a buck. It sucks. Obviously, I was hoping to get into this position, as that is up now. At this point in time, it's up like 60% from the potential entry. So got greedy on that dollar and missed a 60% move. It happens. Again, I'm not going to chase it. We have taken out these last two little swings right here, but until we actually get above like this previous all-time high, you can't get like overly bullish on this for like a blue sky breakout. But it does look good. It looks strong, and overall we do expect continuation to the upside. Obviously did not see our target on here happen, but there's still a possibility that this is like our A right here. We come down here, that's our like bottom of the A. We come up here, that's our top of the B, and then we're still going to get a C wave to the downside. So I'm not convinced this thing is going to new all-time highs necessarily, but it is a possibility, obviously. So but again, unfortunately we did miss the entry on that one, but it is what it is. Pelotonic, I mean, this thing still looks like it's building strength right here. You could argue that there's a lot of reasons why Peloton's probably not where I want to be right now, but based on the chart, it's fine. We're up here at a key resistance level. If we break through that resistance level, there's still another level from back here, and then also like the support at like 139. After that, blue sky breakout. If we get above like 168, I'm not in this trade. I don't like this trade. It looks to me like there's still a high likelihood this rolls back over and sells off. But if you are in Peloton right now, it doesn't look terrible. It showed a lot of strength off that 80 level back here. It's already up like 50%. So we're above all the moving averages. There's still little resistance above our heads. We are seeing the 200 exponential and simple sort of flatten out right here. So as long as we're above them, it's okay. And we would expect them to keep like just kind of pushing the price action up. But there's still a high likelihood this thing just gets like a big bearish candle, sells back off below them, and then this rolls back over. And that's honestly what I'm expecting to happen. I definitely think Peloton is going down, but at this point in time, that's my feelings or my experience, or just the way the chart looks like overall, the way that this thing is like structurally kind of like shaping up to me. But as of now, like technically just looking at the chart and using our rules, there's nothing that tells us this is going to just roll over. If it does top out, it would be like the 618 or the 786 probably. That is, again, what I'm expecting to happen. But again, I wasn't expecting us to get back above the $100 level. So we'll see what happens. We'll see if it gets up here to that key level, and what happens when it does, if it breaks up, if it breaks down, etc. So, but you don't have to be right every time on these things. It's just a trade that we missed out on. Oh, shucks. Put that money somewhere else instead. I probably wouldn't take an entry on Peloton anyway, because I just don't believe in the company and the product. There's a lot of like stuff going on with them that just makes me bearish. Like all of a sudden switching over to like you have to pay a monthly fee model, or the thing you already bought no longer works. I don't like that. If I bought a car from a dealership and I was driving it around, and then all of a sudden like they put out like, sent me an email and said, hey, you remember when you bought that car? Like, turns out that if you don't pay us the monthly subscription for like the XM radio that came free inside the car, if you don't pay that monthly subscription, your car is actually not going to work anymore for your own protection. I don't like that. I already bought the car. We had a deal. You sold me a car. I bought it because I liked the deal. And then afterwards you can come at me and change the deal. That's bearish to me. I don't like that. That makes me like not believe in the company. That's like I don't know. That's shady. So we'll see. But again, look, NordicTrack was great until it wasn't. And I feel like Peloton's going to be the same way too. I think it's like a trendy type deal, and it's going to be popular right up until it's not. So, and they're not doing themselves any favors. Arguing like after people are dying and getting sucked up into their machines and turned into ground beef, they're like, oh, for your protection, you have to pay us a monthly fee. I'm like, what do you mean? You should pay me a monthly fee to keep using your product, with the chance that my kid gets turned into ground beef. Anyway, Apple, again, everybody's extremely bullish on Apple, but I look at it as just another lower high. If we take out this high right here, maybe I'll start looking at Apple like a little more bullishly. We have technically broken out of like this little flag deal, this little triangle. So we could easily see continuations to the upside. But again, I would rather see it come back down, find support, or even if it doesn't come down, even if it just hangs out here for a little while and then starts bursting to the upside, I'll be much more ambitious on it. We are still above the slope line. We are still in the bullish control zone, but I just don't love this price action right now. You could argue, though, there's a trade waiting to be had off of like this 0.5 level up to the 1.236, which the risk reward on that is pretty nice. It's like 4-1, so it's not bad. If we broke back down inside the zone, obviously, it starts looking a little rough. You might even want to take like a little less of a risk reward. This would be a little closer to a 3-1, and then putting in like a 6%. If we took out this like previous area of support back here, it looks like a failed breakout. Still a nice trade setup, and then takes us to 1.236. And then, there's obviously, if we get up there and we take out that previous all-time high, it's more than likely going to see continuation. Where is it going to see continuation to? Oops. Probably up to, what the fuck? What did I click on right there? Oh my gosh, I made the volume. Oh my god. TradingView. What the fuck? Alright, so we're getting rid of the volume. Holy god. I mean, I don't even know what I did at this point in time. I combined the indicator with the actual chart right here. Okay, great. So I will sort through this later on. The trade setup on Apple with the target of the 1.618 would be 68.95. And I just want to give a shout out to TradingView. Thank you so much for adding in all these amazing features all the time. It's so great that you're just innovating your platform and allowing us to do amazing things like this. Because I mean, if this isn't a useful feature that you've just added in, I honestly don't know what is. Because wow, I could just see where this would just be so useful. Oh dear God. Look, I'm not gonna lie. I'm not the most tech savvy person out there. So when like there's new like stuff coming out from TradingView all the time, and they have like a new update, and now we've added in this feature. 99.9% of the time, I literally want to just smack TradingView upside the face, or whoever it is, Apple, whatever upgrades that just came out that are supposed to make my life better, literally never do. So it always just ends up being a further pain in the ass, or somehow messes up like whatever I had going before. So I'm old school. I would rather you just give me something and just leave it alone, and it just keeps working the same way it does. And then when you come up with something that's like super useful, and you can explain to me ahead of time why it's useful, and I agree to you that the risk reward on the usefulness of this new feature is worth it, I will 100% get that update. But until then, I'm going to just end up with a chart that looks like this, and I don't know what the hell just happened. So Zoom video, somehow this got like bumped off of our charts. I haven't looked at this in a while, but the trade setup has played out nicely. We're up over 30%, 38% on this entry, off of basically what amounted to like the perfect entry off the bottom right here. I think literally got in this trade by like 30 cents or something like that. But we have hit our first trade setup right here. We have broken out of the resistance, which is good. As long as we continue to just kind of like hang out right there, looks good. It's definitely showing some potential for like that little muddled divergence signal. Definitely showing a little weakness. So maybe this gets rejected and sells back off, and I'll go ahead and lock in these profits. But there's still a probability or possibility that we're going to make another 40% on this if we do get that measure move to the upside. So we'll pay attention to this. And then the truth is, I would be 100% fully comfortable just closing this position right now and then just taking a re-entry off the bottom of the range. Because I think more than likely what's going to happen is, you guys know how I feel about channels. You know how I feel about resistance support, about triangles, about pretty much anything. Like, as long as we're operating inside of this channel, I would expect us to continue operating inside this channel until the one time that we don't. And the one time that we don't, I'll be wrong. So what does that mean? It means I'm completely comfortable just selling off this position right now, locking in a 38% gain. And then if I'm wrong and this consolidates and starts continuing to the upside, I'll look at another trade setup, for like a re-entry off this position. But the truth is, right now, there's no reason to just close this. But, if we start giving back, basically, if we lose this level right here, which amounts to like the macro 236 at like $346, I don't want to be in this trade anymore. So am I willing to risk 10% on my position, 10% of my position, or, 25% of my profits for this to be continuation to the upside? Sure. Would I be 100% comfortable also if there was a bunch of other places and I was just like struggling to figure out where I'm going to close a trade so that I can shift it somewhere else? I would totally close out part of this trade. But the truth is, right now, I see less good opportunities. So if I'm in a strong trade that's already like profitable and there's potential for it to continue, I just assume hang out in that trade. That may change here like very soon, as again, we're getting close to like rebalancing time, and I'm already taking a look at what's going on, looking at tech trades, trying to see like what sectors I'm over invested in, etc. So and some of them, I'm flexible on. Like I'm completely flexible on some of the positions that I'm in right now, or some of the sectors that I'm in right now, because of my macro view on the market. So let's take a look at how Kathy's doing. So we got ARKK, ARKK, and this is a good point right here too. While I like overall the ARK funds, and I have expressed that like many times, I like the idea of innovation. I like the idea of like the genomics. I like the idea of artificial intelligence. I like the idea of like the space fund and everything. While I like those ideas, the actual funds are total shit. They're performing like garbage right now. And that's what I mean by this is a stock picker's market. What is ARK up from its like bottom of $97? It's up 25%. And if you took the actual entry on this, like what is it up from 113 to 125? It's up like 10%. Why not just take Tesla? The Tesla trade's already up 20%. Why not take Pinterest? The Pinterest trade's up like 25%. Why not take Bumble? The Bumble trade's up 40%. There's so many other good trades that are just outperforming this. I think that this ARK innovation, or like the ARK funds, will be good in the future. And you guys know, obviously, I'm looking at a 20%, 26% upside off that trade setup, off the break of this little channel top right here. But again, it's still a bearish pattern, and we still haven't taken out this level here. You know, I will get bullish, obviously, if we come up behind above this 1.618 or the 0.618, you know, for continuation to the upside. But overall, these things are like massively underperforming. It looks like the Peloton chart too. We lost the 200 exponential and simple moving average. We're back above it, but the slope line's almost flat right here. So it seems realistic. This could just roll over at any time and see continuation to the downside. You know, and then what does it end up looking like, you know, on the actual like breakdown of it? It basically looks like an ABC correction. So it looks like we topped out right here. It looks like we came down and put in a low right there, and then we potentially come up here and put in like our B there, and then we come back down and put in a C, you know, somewhere down in here, maybe the same low, maybe the higher low, I don't know, you know, we'll have to wait and see. Maybe it's the 382 on the macro down here that we front ran, maybe it's a 0.5 down here and we come down to $70. You know, I don't know what's going to happen exactly. Still too early to tell, but at this point in time, this is still an internal retracement until we take out either the all-time high or that swing low at $97. But, you know, overall, the ARK funds are all extreme underperformers, and some are worse than others. So yeah, that's our tech, and also like a recap on a bunch of our trades that we are currently in. You know, as you can see, all the tech trades setups are profitable. Some are extremely profitable. Some are looking like they're toppy right now and, you know, time to scalp and get out. Others are looking more like they're going to develop into a swing trade. We'll have to wait and see. So, what a brothel. Okay, so Dow Jones, you know, did not take out the all-time high here. Still just hanging out at the all-time high here. You know, looking like more of a bullish reset at this point in time. But we did put in a lower low. We got a little gap price action right here. So maybe we come back down, fill that gap. I mean, it's hard to get bearish on these things. It's hard to get bearish on. But the truth is, it's hard to get bullish on them either. I mean, this is a sell-by-sell divergence signal on the weekly. We came back up. We're trying to do something. But, you know, if we can't take out that all-time high and flip over this parabolic SAR right here, I don't see any reason why we should get bullish. Looks like we're about to lose this slope line. The histogram's about to creep under it. This looks like it's very toppy. This looks very close to topping out. I would not be surprised if in the next couple weeks, as the half comes to an end, we start seeing these indexes just totally take a dump. But we'll see. Again, I'm not going to sit here and call the top every time, you know, we see a little weakness in the market. But there's just, to me, there's almost no opportunity left in these things because they're at all-time highs, showing, you know, basically that they're exhausted or very close to it, and there's so much downside potential right now. S&P put in, like, you know, not quite a bullish engulfing candle, but again, we got the sell-by-sell signal, you know, getting ready to potentially exit the bullish control zone. Bunch of red histograms in a row. So we're at all-time highs, but we have red histograms on the weekly, and we're about to lose the slope line, and we're getting the divergence signal at the top of the range. Someone's lying. Either price action's lying, or all our indicator oscillators that work better than anything I've ever seen are lying. So which one is it? I don't know. Well, I guess we'll wait and see. But if I had to guess, I would say price action is lying. So I honestly expect these things to just roll over at any point in time in the near future. So, but we'll have to wait and see. ISIC, that little tech, that NASDAQ. It does not surprise me at all that the NASDAQ is showing the strength when we look at all these different stocks. But what is going on here that's different? None of the big movers, none of those big stocks, none of the positions that we're looking at have broken out to a new all-time high. And yet somehow the index is at a new all-time high. What does that tell you? It tells you there's a bunch of underperformers that are basically breaking out to new all-time highs that are making up for like the weakness in things like Tesla and like all the other stuff that we looked at. So because how many charts are breaking out to a new all-time high? We looked at what, one? I think eBay was the only one that was at a new all-time high, but we have like PayPal, we have Apple, we have Tesla, we have all these other stocks that are huge parts of the index underperforming compared to the overall index. Well, how likely is that to continue happening? Not very likely. We would expect the ones that are typically overperformers, the ones that are like heavily weighted, the ones that normally are like crushing it, we would expect those ones to be showing more strength in the overall index because the index has a bunch of like weak shit in it. So that just tells me it's all part of like rotation within the actual sector. You know, if you're overweight on something like Tesla and then you're underweight on a bunch of like little shit stocks inside of NASDAQ, you know, you start taking some of your profits out of Tesla and putting them into some of the other like little shit stocks. So, but again, you know, new all-time highs. Are we going to get our, you know, measure move to the upside as we break out of essentially like this ascending triangle flag pattern? Yeah, maybe. But remember what we said about situations like this. There's always a possibility once we lose that slope line right here that we just immediately pick it back up and continue to the upside. But here we are, the difference being here when we broke down, that was our like capitulation dump and we were below the zero line and then we were able to reclaim the slope. Here, we're still well above the zero line on the histogram right here. You know, we're well above it and we just flipped the slope over red. Look at the amount of time that the slope was green through here. Look at the divergence that has developed now. We have one drive of divergence right here. We have a second drive of divergence right here. And now we have a third drive of divergence right here as we break two new all-time highs on the weekly. So we have a high right here, a lower high, and then potentially another lower high as well. So maybe this continues to the upside and invalidates the divergence. But if I had a guess, I would say more than likely what's getting ready to happen is this is going to turn into a throwover and just roll over to the downside. Ooh, hopefully I muted that in time before I cleared my throat. If not, sorry about your luck. But on the weekly here, couple green histograms in a row. You know, we got the hard buy signal and broke out to a new all-time high. Man, excuse me. Get a little drink there. Starting to get a little froggy, guys. I don't know what's going on. The old voice box is busting my chops. But yeah, I mean, we'll have to wait and see what happens here. This, again, you know, yeah, we're at a new all-time high. That's great. So bullish on tech, right? All in. Yeah, I don't think so, bro. I don't think so. I don't love it. I don't like this price action. I don't like what these charts are telling me right now. Looks like we're running out of steam. We're running on fumes. Again, we have lost the slope line. You know, the histogram, I'm on Russell, the old Ruddy right now. We have lost the slope line now. We still have a blue slope, but the histogram is below it. We had the hard buy. We had the hard sell at the top right here. And now here we are back at the all-time high again. But we've lost the slope line. So what is going on here? We're getting like a bunch of like weekly divergence between the actual assets and the indicators themselves. So that tells me we're losing momentum, but we're at all-time highs. So how is that happening? Well, there's just enough buying coming in to break through these levels, but there's no follow through. There's buying coming in, but less buying coming in. Like it's like, you know, you can run out of gas on a car. Okay, if you're on a car and you're going down like a hill or something like that, or say you're just going up a hill. Say we're going up a steep hill, and then all of a sudden we're going 60 miles an hour and the car runs out of gas and stalls out. We can keep going up the hill. We're at 60 miles an hour. But we're going to go from 60 to 50 to 40 to 30 to 20 to 10 to 0. That's our throwover. We top out. We have no more way to continue up that hill. And then all of a sudden, we're going to just start rolling backwards. So that's the idea is that these momentum indicators are telling us, even though we're still getting further up the hill, we're running out of momentum. So we can keep going up the hill. We're going 60. We can keep going up the hill. But now we're going 50, but we're further up the hill. Now we're going 30, but we're further up the hill. We're higher up the hill than we've ever been. That's our price action. Our price action is at new highs, new all-time highs. The car is further up the hill than it was before. We're at the highest we've ever been on this hill. But one of two things is going to happen here. We're eventually going to run out of momentum, and then we're going to start rolling backwards, or we got to like pull over to the side of the road, stop the car for a little bit. Price action's got to consolidate. We got to call AAA or a buddy or walk to the gas station. We got to get some gas. We got to put it back in the tank. And then after a bullish consolidation, then we can continue to the upside. But we can't just keep rolling to the upside because of a thing called gravity. And that's the same thing with this price action on a lot of these charts. We can't just keep going to the upside indefinitely when there's no gas left in the tank. And that's what these charts are telling me right now. So we're on the ICLN, clean energy. This thing is looking like it's potentially about to break out. We're at our entry level now. We made it past our resistance right here. Is it possible that we don't even get this measure move and we just top out here at like 24, 25 bucks? It definitely is, but I like this. We talked about this last week and the potential to go ahead and take this entry right here. This is telling us something different too. Here's our sell by sell signal, and the absolute top right here. Since we got that divergence, and I'm on the weekly again, since we got that divergence and we came down here, we sold off like 38%. That's a pretty nice sell-off. And now here we are inside the bearish control zone. We have exited the bearish control zone. We're getting the hard buy signal. We have multiple green histograms in a row. We haven't had a long time for this red, but the fact that we're below the zero line tells me by the time they get back up together, depending on how much of a violent move this has or how long it just kind of goes sideways for, this could go on for, through September, and then finally the histogram makes it above the slope line and we see our continuation. We could even put in a lower low, which would actually like correspond more with the TJD TDMACD. But at this point in time, I'm willing to take a little bit of a risk, on this one. And again, the risk reward on this, we have 6.5 to the downside, 15% to the upside. So it's 2.3 to 1. Next target up to 618, 22 to the upside, 6.5. So 3.4 to 1. And then if we make it up to 786, but still don't put in a new all-time high, 33.6 to the upside with 6.5 to the downside. I like fundamentally as well as technically ICLN, basically like clean energy, like future of energy, like, the potential for not just like using oil forever into the future. So I do think confidently that we will eventually put in a new all-time high on this. And also, again, I'm looking at this as like a macro zoomed out view where we basically bottomed out back here in 2012. We put in a one wave, we put in a two wave, a higher low, we're in an uptrend, we break above the 200 exponential and simple moving average, we go parabolic, we top out our 3 at basically our 786 on the macro from our all-time high to our all-time low. We're still inside of an internal retracement. We come back down here. Do we get down to the 0.5? Maybe, maybe not. Do we get down to the 382 and retest our what was resistance turned into support when we come down to it at like 14 bucks? I think it's less likely, but it's definitely possible. Once we broke above the 200 exponential and simple here, we came back down and retested it and put in a new higher low right here, and then saw massive continuation. This was like a big shakeout right here in the Rona dump, and then we basically went parabolic. So we had a violent sell-off right here. Is it possible we come back down to like the $15 level? It 100% is, which is why I'm not all in on this. But at the same time, I do like the price action and the way it's developing now. And if we, actually I should have stayed zoomed out. If we look at where our potential target would be for like a fifth wave, if we look at the 1.618 of that sell-off right here, our 1.618 target is like $47. So, on the macro, if we look at buying in at $23 and getting out at $47, what does that tell us? 100% move. And then what if it's a 2.618? That's $80. So again, if we bought in at $23 and then it goes to $80, and I'm looking at the fib extensions here in red, in case you can't see that clearly or you don't know what the hell I'm talking about, and again, I can just toss this in here just to make it a little more clear because I know some of this doesn't show up as clearly. This would be basically the macro 1.618 fib extension for a potential wave 5, or maybe it gets up here a little higher to like the 2.618, which is what I was talking about for the second target. Again, does it have to happen? No. Could this literally go down to $14? For sure, it definitely could. But I mean, if we start looking at the risk reward ratio on this thing, we're basically, that's 246% reward. This is 106% reward. And then if we look at, the potential risk we're looking at, if we break down below the 0.5, that's a 23% downside, 10.6 to 1 and 4.6 to 1 with a 23%, which you guys know how I feel about. When I put these long-term trade setups in place, I'm not just like, oh, we broke down from the 0.5, I'm selling out of this position. Necessarily just a hard sell and it's done. Because we could very easily make it down to the 0.5, come slightly below it, and then get our continuation to the upside. But, again, I would look at this as an opportunity to buy. If we invalidated this trade by going below like 14.6 or like this overall structure by going below like $14.60, I would start second guessing, do I really want to be involved in this? Or is this just like dead? And in all actuality, we have a high, we have a low, we have a lower high, and then we're coming down here to put in a lower low. I don't think that that is necessarily the case, but, you know, that's the thing about, you know, these, when you're looking at the long-term view, it's possible a company goes bankrupt, or, you know, an index, like, you know, collapses on itself because of X, Y, or Z. I mean, but with risk reward ratios like this, and proper position sizing, and accurate like time horizons and whatnot, you know, it works over time. Trust me. XLE. So now we're just looking at our different like sectors. This is obviously the energy sector. Still looks strong overall. There's a lot going on in this chart. Let's clean this up a little bit. Let's turn off our moving averages. Take a big picture look at this bad boy. You know, I like energy, and again, this is what I'm looking at. I'm looking at a macro 5-wave structure. The previous all-time high on this was $100. You know, obviously, like, oil is still far below its all-time high. It's like basically at 50% of its all-time high. This is at, where are we at right now? $55. So this is basically at 50% of its all-time high. So is it realistic to think that we could come back up here to some of these key levels, including the all-time high and possibly continuation? I mean, I like to think so. I like to think so. I mean, realistically, like, is energy going to be cheaper in the future or more expensive? Like, I mean, based on life and experiences, like, everything just gets more expensive over time. So is it possible that I'm correct about the deflationary environment and prices on everything are cheaper in the future? Yes, it's possible. But when I say I think that there's a deflationary environment, like inbound, I'm talking about on like assets and like optional things. I think there's a 100% possibility that in the future, when you go to buy stuff that you don't need, like bikes and cars and workout equipment and, you know, collectibles and stocks and stuff like that, that they will be cheaper because of the macro deflationary environment. Meanwhile, things that are a necessity, like, you know, food and commodities and, you know, utilities, you know, et cetera, I think there's a good possibility that like energy and utilities and commodities and all that stuff, because they're necessary, would inflate and be more expensive in the future. So, you know, when people say it's inflation, no, it's deflation. They're two sides of the same coin. You can argue anything you want, but if you just use vague terms like there's 20% more money this year than there was in the past. Well, yeah, there might be 25% more currency, but how much of the actual like pie does the like physical currency, like coins and dollars, make up of like all the spending? Like most of it takes place on a digital screen. So yeah, okay, all of a sudden there's 25% more bills and coins floating around. M1 money supply is up 25%. It's the end of the world. Everything's devaluing. Your money's 25% less valuable. Well, how much of M1 is like relevant in like the real economy? It's very, depending on what you're trying to measure or whatever. It's one of those situations where with statistics, you give me statistics, you tell me what you want to hear, and I will explain it to you using those statistics, and it will be 100% backed up by statistics and factual. But that's the thing about statistics. You can make a statistic say whatever you want. It's just a matter of how you word it. And that's the problem with statistics is people can say, that's statistics, it's math, it's science, it's a fact, look at the numbers. Yeah, sure, okay. It's all about how you word it. You know what I mean? You could be like, I'm not even going to get into a specific example because I feel like that's all I ever do. But XLE, so overall, you know, still looks good, but we are at a tough spot right now. We're at a key Fibonacci level, and there's a bunch of resistance above our heads. You know, this could go either way right now. I think we could easily get that burst back up here and another like, you know, 40% to the upside and top out at like 73, or we could easily top out now, come back down, you know, pull the car over to the side of the road, fill it back up with gas, and then we can get continuation to the upside. All right, so XLI, we'll take a break here shortly. XLI industrial, you know, again, I think there's a good possibility that these things are topping out. You know, a lot of these trades I think have just gotten too overcrowded. We're up near the top of this range here. We have this giant pattern. Let me turn off the moving averages again. We're up here at the top of the range. You know, we're basically at the top, near the top. We could make maybe another 15, 20% to the upside, sure. But what happens if we go to the downside? Well, if we just go from where we're at right now to the heart line, that's our 15%. So that's a 1-to-1, 50. It's a coin flip at this point in time on profits. If it goes up or if it goes down, it's even. But if it comes down to the bottom of the range, 31%. So you could argue that there's 2 times the risk to the downside as there is reward to the upside. If there's 15% reward to the upside, but 30% risk to the downside, that's a horrible, horrible trade. I want it to be the other way around. I want it to be at least 2-to-1 to the upside versus the downside. So, and then again, on this chart here, on the longer time frames, what's happening here? Well, we're getting a real muddled divergence signal at the top of the range. Sell, buy, sell, buy, sell. And we're exiting the bullish control zone now. So this looks like it's getting ready to just dump. It looks like it's getting ready to roll over. It looks like it's getting ready to die. Looks like it's running out of diesel. And we got a bunch of red histograms in a row. We are about to lose the blue slope line here on the TJD TDMACD. It looks bad. Drugs are bad. Industrial sector looks bad. But who knows? Maybe, I don't know. If they start adding childcare into the XLI, maybe it'll go to the upside here. I'm not sure. XLF, financial, look, there's 2 macro things going on here. Again, sell, buy, sell, buy, sell. Wow. Looks bad. Looks like we're about to sell back off. We could easily find support at like 31 bucks, but that's like 20% to the downside. We got a big thick red candle right here. Continuation, flipped over the parabolic SAR to the downside. The banks don't look good right now. Okay, let's think about this like macro view here, okay? There's 2 key things that we pay attention to that people don't really talk about is how do banks make their money? Off of fees and interest rates. Interest rates are horrible, so banks don't even want to loan you money right now, right? Why would a bank want to loan you money and make no percentage on the loan because rates are so bad? They wouldn't. So lending is like extremely low right now. And then the second thing they make money on is fees. Well, are they getting a ton of fees right now on people that are like not able to pay their credit cards or overdrafting their accounts? No, people have more money than they've ever had because the government is literally just handing it out to anybody, especially if you don't have a job. They'll hand you out even more to make sure you don't run out of money because we're artificially inflating the economy. So both those things macro tell you that you don't want to be in banks right now. It's a shitty time to be in banks. And then also there's an argument for Fed coin. Well, let's say Janet Yellen and Jerome Powell get into a fist fight and decide that they don't like what the other one's doing, the Treasury and the Federal Reserve. And Janet Yellen decides we're going to make Fed coin. And all of a sudden now we can just like dump money straight into people's accounts. Well, again, that's what the bank's job is to do. The Fed's job is to make it so that the banks have less risk to give the people money. So if Janet says, hey, Jerome, I got a little trick. I'm going to jump right over your head. I'm going to skip you in line. I'm going to go straight to the people, which again, obviously is illegal or whatever. But let's just say she does. And Treasury just starts like dumping money into people's accounts or whatever. Which that's fine. Maybe they do that. I mean, we're doing everything else that's a horrible idea. Why not do that as well? But who does that screw? It screws the banks. Like the banks are supposed to be the ones who are like the intermediary between like the Federal Reserve or between, like the overall like system and the actual people. They're like the middleman. So if all of a sudden we get like Fed coin and we just like stop using the banks, is that going to be good for banks? If like the big boy bank tells all the little banks like its little minions, like, hey, we don't need you anymore. Or if Janet Yellen, Treasury Secretary says, hey, Jerome, I don't like the way you're handling things, so I'm going to be the one to do it. Either way, whether the Fed decides to do it or whether the Treasury decides to do it, still has the same effect, where all of a sudden banks like don't serve a purpose anymore or have less of a purpose, or they're basically getting screwed. So then are they going to make money on loans if the Federal Reserve is just giving people loans straight up? No, it's going to be even worse for the banks. So there's a lot of arguments that like the actual like financial or banking sector, like macro, is bad right now. Like I would not want to own a bank right now. I mean, I would want to own a bank right now if it was somebody else's and they just gave it to me. But I wouldn't want to be in the banking industry if that was like my family business. XLU, utilities, sold off pretty heavy. It's bouncing the 200 exponential and simple. We talked about this as a nice entry off the bottom of the channel for just a little short-term trade to the upside. Nice little 4%. But I mean, this is like it's like an untradeable range. This is not even worth bothering with. Like, I'm not going to go into a trade for 4% reward for 2% risk. Like, there's just a billion other trades that are better. U.S. oil, we almost hit our next target up here to the upside. Again, I expect continuation. Oil is still extremely undervalued. I mean, this thing's at $75 a barrel. All-time high is like $140 a barrel. So, you know, oil, silver, uranium are some of like the most undervalued like assets / commodities. Some of the only undervalued things. So, but we could be topping out here real soon as well. So, you know, I'm not looking to like enter at $75 a barrel, but or $74.35 a barrel, but you know, we'll have to see what happens here. You know, a lot of this is based on supply constraints. Not like all of a sudden there's just like a massive new demand for oil. It's like, okay, we're going to like stop pipelines. We're going to stop fracking. We're going to, you know, agree, like OPEC agrees to like, you know, produce and export less oil to the world. So all of a sudden there's less demand, but there's also much less supply. So the supply demand ratio is like altered because there's less supply, even though there's also less demand. Like if before I was giving you 100 barrels of oil and you were using 75, there's more supply than demand. If all of a sudden you only need 60 barrels of oil, but I'm only producing 50, it's going to drive oil prices up, because even though both supply and demand have come down, supply has come down substantially more than demand. Therefore, it creates a deficit in oil. You know, so. All right, but I'm going to take a quick break there, use the restroom, and we'll be back in like 5 minutes, 2 minutes. I never break for long, so. And then I'll jump back into chat, and we will continue to run through these assets, run on down the line. So we'll do crypto next, guys. So yeah, give me just a minute, and we'll keep going. All right. Guess who's back? Our Kit's in the chat. What's up, my dude? Good to see you, brother. Late but not forgotten, my man. I hope you're doing well also. Oh yeah, good to see you guys. Good to see you guys. So yeah, let's jump into some crypto. Crypto. All right, so let's look at our chart here. What has changed, if anything? Uh, Man, we did a pretty deep dive into Bitcoin on the last stream. So if you have not seen that one, I highly recommend you check it out. Before we jump back into, always when I come back from break, I like to remind you guys, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. As far as the group too, before we jump in, I have theoretically responded to everyone who has messaged me about the group. Got a phenomenal response. Quite a few people. If you responded to me after I responded to you, after you initially hit me up and I didn't respond back to you, it's just I have all those ready, and I'm planning on sending out further instructions, essentially, which will just be like an invite into the private group, and then like basically like contribution instructions or whatever. If someone specifically wants to make their contribution another way, I will give you a different address or whatever to make your contribution. But typically I just take Bitcoin and Ethereum. But if somebody wants to use like XRP or something like that to cut down on fees or whatever, I don't care, or Litecoin or whatever it is, that's completely fine as well. I can send you an address for that also. But typically I just take Bitcoin or Ethereum. But I know right now like the fees are ridiculous. So, if you want to use a different form of contribution, you can. But I mean, in the long run, it's really not that big of a deal. So, but yeah, I will give further instructions in the next day or two. We are technically starting that up on the 1st of the month. I may send out those instructions ahead of time, and if people want to join a couple days early or whatever, that's fine. I may be active in there before then. There's still a bunch of stuff I'm working on, like always. I have a million projects going, but I'm really looking forward to it. I'm excited. Get everything back rolling again. I know people are excited for it, and long run, really looking forward to it. Definitely ambitious, and I hope everybody else is too. And gonna be fun, gonna be profitable, and going to be loaded up with knowledge. And matter of fact, let's talk about the stream name also. I'm all in. Last chance to buy. Okay, those are the two worst things I ever like to hear from people. I'm all in. Why are you all in on anything? You're either at the point where you're saying, I'm ready to either give up or win, and there's no other options. I'm either going to be right or I'm going to be wrong. I'm either going to play the game or I'm not going to play the game anymore. That's what I'm all in means. I don't like when I hear that from people. That's like the most uneducated thing I've ever heard in my life. And last chance to buy. This is your last chance. After this, I'm done. You'll never be able to buy something at this price again. You'll never be able to get this again. This is it. Those are like the stupidest things I've ever heard in my life. Why would it be your last chance to buy? Why you can't just buy it for more later on? You're not gonna be able to. They're never gonna sell gasoline again. It's your last chance to get gas. It's your last chance to buy Bitcoin before no one's gonna sell it anymore. There's no more people selling Bitcoin ever again. I'm all in on Bitcoin because I'm in a cult. Like, those things are so stupid. Like, you'll never, like, it's like when people talk about metals and they say, in the future, silver will be unaffordium and unobtainium. You won't be able to get it and you won't be able to afford it. Well, can you just buy less of it? You can't just buy a smaller piece of it if it's so much more expensive? Or it's going to be so expensive and it's going to be so rare and people are just going to, like, hodl it and, like, hide it, like, Pulp Fiction style, like the watch, and you'll never be able to use it or get it, and they're just going to keep it safe inside of their prison pocket. Like, get out of here. It doesn't even make sense. Like, it's so stupid. It's like that FOMO mentality, and it's like, I'm going to try to make you FOMO into something. Like, wait for confirmation or buy things. Like, I'm a value investor. I look at risk reward. I look at, potential upside. I look at time frames. I look at fundamentals. I look at technicals. I look at a lot of things. So when someone says to me, I'm all in on XRP, I joined the cult. I've got the Kool-Aid in one hand and I've got my man parts in the other, and let's go. Like, it makes no sense. Like, it just blows my mind. If I ever hear someone say, I'm all in on anything, if you're at the casino and your buddy looks over at you and has a big smile on his face and you go, why are you so excited? And he goes, I'm all in. And you're like, so that's it. So you either win right now or you don't get to play anymore. That's what I'm all in means. So you've decided for us that you're going to be either much better off after this hand or this spin or whatever, or we're not going to play the game anymore. I don't like that. I would rather you not just be all in on things. Like, you're ready to quit the game if you don't win right now. I'm making a stand. This is the bridge I'm going to die on. I either win or I'm done playing this game. Like, you should never look at intelligent decisions like that again. It makes no sense at all, but it is what it is, you know. But I hear that all over the place. I hear people talking about, you know, this is the last dip, and then after that, crypto's going to the moon, and this, that, and the other. I'm pretty sure we'll see some warning signs along the way. And I'm pretty sure that if you're smart and you're an investor and you're going to keep investing, you're probably not going to ever be all in on anything. Like, it's so stupid. And you always hear about the people who went all in on Tesla, you know, at $100, or all in on Bitcoin at $4,000, or all in on Ethereum at $80, or all in on Cardano at a penny. You don't hear about the people that went all in on XRP at $3.50 and it never went back to it. You don't hear about the people that went all in on Dash at $1,200 and are down, you know, 90%. Or, you know, the people who went all in on et cetera, et cetera, et cetera. All in on a poker hand and they had a pair. Or you don't hear about the losers because nobody wants to talk about that. You just hear about like the 1 out of 100 guy who went all in on something that actually did well. So don't ever get stuck in that mentality. Don't ever let these like FOMO people tell you like, you know, do this, do that. Like this is how you're going to win. No, take your time and win over time intelligently. Make money over time intelligently. Grind it out. It's not as glamorous. You don't get a Lamborghini tomorrow, but in the end, your likelihood of success is exponentially more likely. So Bitcoin futures obviously closed well below both our moving averages. We got a very powerful move at futures open right before our weekly close on Bitcoin. Spot market back up. So right now it's just slightly above the 200 simple, which is our dark blue right here. 200 exponential is the light blue. This looks bad. It's going to be very hard to get above the 8, the red moving average here, and the 200 simple moving average right here. We have not been able to basically get back above them. We also just got the hard sell signal and we cruised up since then. You know, we're potentially going to pass over the slope right here. We do have some divergence taking place. It is possible we get that move up like to 42, you know, maybe as high as like 46, 48, you know, but the truth is it does not look good. And if we look at the weekly here, what happened on the weekly? Well, we came down to the 50. We closed on top of the 55 and now we're pushing up. So are we just going to push back up to the 8 and get rejected again at like 37,900? We're inside the bearish control zone. So you say that's perfect. We're at the bottom of the range. The bears are clearly in control now. We got the sell by sell signal, divergence signal at the top of the range after months of positive price action. You know, the last time we got that divergence signal was a buy sell buy inside of the bearish control zone, and that was at $4,000. So when we got the buy at $4,000, we literally never returned to that price again. We got the divergence sell signal at, you know, basically $56,000. So are you prepared for us to never return to $56,000 again? Because that's what happened previously when we got the signal. So we'll have to wait and see. I don't know what's going to happen. But, you know, bunch of red histograms, bearish control zone, red slope on the TJD, TDMACD, cross on the 821 to the downside. You know, more than likely, we're going to $26,000. But again, that's just based on technicals. Like, you know, last chance to buy. We have a doji indecision candle on the monthly. We have our, you know, initial flip of the parabolic SAR on the monthly. Again, we're below the 8 moving average on the monthly. We have 2 red histograms on the monthly. We have exited the bullish control zone. We have the Stoch's crossing the blue and purple to the downside. You know, more than likely, next target is the 21, which is, again, 26,000. So, again, I mean, we could see a bounce. We could see a dead cat bounce. We could see a little relief rally to the upside. But my honest opinion is it should be used for selling. Okay, so what's going on here with all this? We got a descending triangle still kind of taking place. We got that powerful move back up to the top of this resistance line here in red. Resistance, 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 throw over, resistance, resistance. You know, we're now closing below this blue line right here, which was before our support. We broke down from it. We found it as resistance. We found it as resistance. So more likely than not, we're going to get rejected here and sell off. There is some bullish divergence that took place, but Was that just it playing out already? There's definitely a possibility. I mean, let's turn this off and switch over to moving averages. Weekly, you know, on spot markets, yeah, we got bought up fairly aggressively. Put in like a little bit of a hammer down here. Maybe that's our bottom, and we're gonna roll back up here to the upside. But you know, again, bearish control zone, all red histograms in a row. You know, divergence signal, red slope line, 821 cross to the downside. It looks like it's just a matter of time before this breaks. You know, we closed here, we opened here, we closed here, you know, opened here, got to push up, got rejected, closed right back down here again, right back down here again, and now here we are again. So more than likely what's going to happen, you know, if we're just hanging out at a support, the longer we hang out here for, at this point in time, it's 1, 2, 3, 4, 5, 6, 7 weeks of just eating through buy orders. There's a bunch of buy orders right now. That's what support is. It's people saying, I'll buy this level. I'll keep buying this level. I'm going to buy this level. I'm a buyer at these prices. I'm all in at these prices. And then eventually, all the Michael Saylors of the world, all the buyers, all the people that are all in at this level, eventually there's no more buys and there's more sellers than buys. And then we break down to the next level. And where's that next level going to be? Probably 26,000. And what's down there? More people that say, I'm a buyer at 26,000. And then when price action gets down there, all the Robert Kiyosaki's, all the people that have been waiting for 26,000 or whatever, they keep buying, they keep buying. And one of two things happens. You know, either we run out of sellers and then price moves back to the upside, or we run out of buyers and then we break down to the next level, which is, you know, 16, 17,000, etc. But right now, there is absolutely nothing. Everything about us just hanging out at a support like this tells us it's just a matter of time before, you know, we always talk about this. If we're up here at $58,000 and I drop a bouncing ball, the initial bounce off of $35,000 takes us back up here to $39,000. So it's like we bounce a little more, or a little less rather, and then eventually we just roll sideways, and we roll sideways long enough, we get to the end of the table and we fall off. Excuse me. Once we fall off, we hit the next support level and we bounce, and then we roll to the edge of the table, and then we fall off. And then eventually we run out of sellers, and we go sideways long enough that eventually we can start moving back to the upside in a slow and steady grind. But right now, looks bad. Yeah, let me clear my throat again. Woo. All right, so about to get that cross. Left the bullish control zone. The knife is angled powerfully to the downside. We got 2 months building right here. We got 2 days left, 3 days left basically in the month. We're closing below the 8 moving average. And we have 2 red histograms. We're about to get this cross in continuation. Everything right now on every time frame longer than the daily looks absolutely horrible right now for Bitcoin. And even the daily does not look great. I mean, come on. So we got Bitcoin once again, just a couple different indicators pulled up right here. So if you're not familiar with the indicators, they are free. These are a bunch of my like either proprietary or modified indicators. You can use them all, access them all, get them all for free on TradingView. It's all in the description down below. TJD Fisher Transform, the waddah attar explosion, and the on balance volume. Let's take a look at these and what they're telling us. So the Fisher is obviously, you know, down here in the negative zone. It's possible this is starting to roll over and we'll see upside movement. But again, we have broken down from a key level right here, and we're just retesting that level as resistance. So as far as I'm concerned, I don't know what's going to be on this chart. Okay, cool. So yeah, that's perfect. We have this blue line right here. As long as we're below this blue line, which is where we just pushed back up to on that daily close, we're below resistance. So we're likely to just roll over from there. And eventually we're going to get that measure move, and it's going to look like that head and shoulders plays out. So, but again, we'll wait and see, etc. As far as the waddah attar explosion on the daily, it's kind of just like chop. As far as the on balance volume on the daily, you know, we're still technically to the upside and it doesn't look bad. Let's go to a longer time frame now and see what the longer time frames are telling us. So here we got our weekly Fisher. You know, we've crossed below the 0 zone. we're still angled powerfully to the downside. That's bearish, obviously. The waddah explosion, when it's green, bright green, it's good. When the slope line is blue right here, it's good. When it's yellow, it means we're losing power to the upside. When it's red, it's bad. It's powerfully selling off to the downside. When it's orange, it means it's losing power to the downside, but it's still to the downside. And then when we look at the actual slope line here, you'll see we have a couple like real violent sell-offs here, and then we started like the slope flipped over to blue, which meant we were powerfully selling off to the downside. We kind of lost a little bit of that momentum, and now here we're picking back up momentum again. We're picking up momentum to the downside right now. So I would expect our next one to be red if we continue momentum to the downside, and this just keeps getting more and more violent. That means like we're more than likely going to get more violent, more powerful sell-offs to the downside. And then on balance volume, if you're not familiar with this one, the idea behind on balance volume is it's basically weighting price action and the volume that takes place at that price action. And then this is like the price action taking place, whether it's buying or selling. If there's more buying than selling, typically you're going to see like the blue. If there's more selling than buying, you're going to see the purple. And then eventually, if it's a sustained trend, you're going to see this slope line right here flip from, it's been green this whole entire time, which meant overall there's more buying than selling based on volume and price action. And now we're below that. If we stay below it long enough, eventually it's going to flip over red, and it's going to mean there's more selling than buying taking place. This essentially is to identify smart money versus just random people that are buying. So this separates like institutional money from like the Bitcoin apes. Hopefully that's not trademarked by AMC. I don't know. But anyway, that's on our weekly. So we're now below that slope line now for the first time since right here. So July 2020 at less than $10,000. We were in an uptrend the whole time, and now we have broken below that, which means there's sustained more selling than buying. Let's look at the last couple times this happened. Okay, so we first saw the breakdown in 2018, at like $10,000. From then we went to $3,000. Okay, from the capitulation event at $6,000 to $3,000, the slope line was red. Okay, and then again at $14,000 when we topped out right here, we broke down below it at about $10,000. Once we broke down below it, we had a sustained downtrend that took us to $4,000. Okay, and then we had a little chop zone through there, and now here we are broken down below it again, and potentially going to have slope to the downside. Could we still see further upside potential? Sure. Could we invalidate what's taking place right here, and all of a sudden there's more buying than selling again, and we continue to the upside? Sure. But right now, is that what we're seeing? No. There's more selling taking place than buying. And the fact that there was this Wyckoff accumulation or distribution pattern up here, I bet. Sure it is. Okay there, guy. And then if we look at the monthly on these same indicators, we are peaking out here. Basically, we have topped out on the Fisher, and there's still massive amount of downside potential. We're not even close to the zero line yet. Once we get to the zero line, we would expect continued selling. The way this is peaking out right here, could we see a little more sideways action like this, and then another peak to put in divergence, and then top out and go into a bear market? Yes, 100%. And that would go along with the potential idea that we still see a new all-time high before end of year, and this halving cycle is not quite done yet, but does not need to happen. And right now, this thing is powerfully angled to the downside. If it starts leveling out and kind of going sideways, that would reinforce that view much more. But right now, it looks terrible. And then again, we didn't see that violent of a move anywhere along here, and then we topped out, sold off, and then here we have just a straight up violent move to the downside. And then again, if we take a look at the waddah explosion, we saw a bunch of green and then dark green, and then we lost the slope line. It turned yellow here. Here we see a bunch of bright green, dark green, and this slope line is flat. As soon as it rolls over to the downside, it's going to turn yellow, and then we're going to start seeing like red and orange come through here. So again, we are seeing volume weighted selling to the downside. We are losing strength. We are now gaining strength to the downside, or about to start gaining strength to the downside. And then last but not least, on the on balance volume, we saw basically once we were already in the bear market back here in 2014, we were below the slope line. and then eventually it flipped over red, and then we broke back above it, went into a bull run, and then again, same thing happened here. Right before the capitulation down to 3,000, we broke down from it, and then, you know, went sideways into the red through here, and then we broke back above it, and now here we are re-approaching that slope line again. So, you know, what happens here? We probably are just going to chop around and slowly just sell off, but we'll have to see. But again, that's on the monthly, and none of those look good. Not one indicator, not one oscillator on any time frame from basically a daily or more looks good. So, but it's your last chance to buy. Dogecoin has broken down from a key support level and has been unable to get back above it, so it's probably just going to roll over and die here. So soon Dogecoin will go from 25 cents to probably 8 cents. So get ready to lose 75% of your money. Is it possible we consolidate here off that hard buy signal on multiple green histograms and we just go to new all-time highs? Sure, anything's possible. We could also discover unicorn bones. Ethereum lost a key support resistance level right here. It's trying to regain it right now. We're getting the hard buy signal. We got a couple green histograms on the daily. It's trying. There's potential here for Doge and Ethereum and unicorn bones. I wouldn't give up on them yet, but look, I got to see some kind of proof, man. I got to see like a unicorn horn or something. I'm not just going to believe that all of a sudden. BNB, same thing, same chart. Everything's the same. All these look the same. These are the best cryptos too. Those are the best cryptos. Cardano, is Charles Hoskinson still a shill nerd loser with no working products? I mean, I would say yes. It's up to you to make your own decision. But, you know, does Cardano actually do anything? No, it doesn't. No, it does not. It did make it to new all-time highs this bull run, so that's good. It's not the worst crypto, but it's definitely, you know, it's definitely close in my opinion. But Charles is a salesman. XRP. XRP is on the list of the worst cryptos ever in existence. It's not quite like Dash trash, but it's pretty bad. XRP is one of the few mainstream high market cap cryptos that was unable to make a new all-time high this bull run. It is a cult. You can own XRP but not be in a cult. You can be in the cult, but you have to own XRP. Will XRP ever go to new all-time highs? It's possible. Does it look good right now, or does this look like probably the worst kind of chart you can ever have? Yes, it's the worst kind of chart you can ever have. If you go through a bull run and hit an all-time high, and then the next bull run, you do not hit an all-time high, which you could argue, yeah, but we just haven't hit it yet. Well, we're running out of time because the whole Bitcoin halving cycle and correlation between, you know, Bitcoin and alts is clearly based on Bitcoin's 4-year halving cycle. So if by the time Bitcoin decides its halving cycle is over and it's going to sell off and go back into a bear market, which could be end of year, could have already happened, we won't know yet. But why is XRP not making new all-time highs? Why is XRP still a piece of trash? Because there's less cult members now, or the cult is bigger but has less money to put into XRP than it did last time. So here, the cult was strong, and they had plenty of Kool-Aid for everyone. Then it consolidated, and then this time, there was less people that wanted Kool-Aid, or there was like less people that were willing to drink the Kool-Aid because a lot of them already drank it and probably died or ran out of money. So more than likely what's going to happen, we're just going to, like, next time we're going to do this again, and we're going to have even less people that want to drink the Kool-Aid. And then, you know, we're going to top out at 60 cents on the next bull run, and then eventually we're going to capitulate down, and there's going to be no more XRP. XRP is bad. It's one of the worst cryptos ever. If it was a business, XRP would have went out of business. Polkadot broke down below key support level. Could retest it as resistance in the bearish control zone. You could argue there's potential. You know, there's some bullish divergence taking place now on this chart. There's definitely potential for some upside, but it looks bad. Polkadot looks bad. Chainlink, same thing. definitely developed some bullish divergence, getting some green histograms here, getting a hard buy coming out of the bearish control zone at a key support level right here. You want to see it hold at 18 bucks. But again, there's no more moving averages above its head. I do think we bounce this area, maybe back up to like 25 bucks, but there's just so much price action above our heads now. Anybody from January of this year is upside down in a position. Anybody that bought any chain link in this year is upside down. So every time we move up 10 cents, there's going to be more and more people that are just trying to get out at break even because they have lost hope. Bitcoin dominance is continuing to the upside. We have officially closed the weekly above the 8. I do expect more continuation. We got the hard buy coming out of the bearish control zone. Multiple green histograms in a row. I told you I thought this was the bottom. It looks like it's the bottom. It's doing the same thing it's been doing every other time we've gotten that same signature. I do expect more continuation to the upside. What does this mean? Bitcoin goes parabolic, but alts just go up a little bit. Bitcoin sells off, but alts sell off way more. Or Bitcoin just goes sideways and altcoins just die. But either one of those three situations leads to Bitcoin dominance continuing to the upside. So you decide which one you think is going to happen. Total market cap, crypto cap. We are getting now the weekly 821 cross. This is bad. All red histograms in a row. We're below the slope line, getting ready to flip it over red. Sell, buy, sell signal on the weekly. Divergence at the absolute top. We have lost from 2.6 trillion. We're now at 1.3 trillion. 50% of the value of cryptocurrency is gone now in the last couple weeks. In the last 2 months, 50% of the value of cryptocurrency is gone. So it was worth 2.6 trillion. Now it's worth 1.3 trillion. So what do you think it's going to look like in 2 more months? Is it going to be down here? Are we going to lose another 50%? Probably. Better be careful. Are we going to be at 882 billion next? Is Michael Saylor going to capitulate? Are we going to be at 550 billion? Or are we going to see liquidations left and right? You better have bought your Lambo, ladies and gentlemen, because crypto looks bad. Coinbase, it tried to bounce that breakout support line. Tried to find some support right here. It did get a bounce, but it just bounced to another lower high. I don't love this position. I don't love this right here. We are putting in some bullish divergence. We're slowly tightening the 821. I think if we can just go sideways here for a little longer without capitulating, we can finally break through it and get a move to the upside. Still in this position. Don't love it, but maybe I changed my mind. Maybe this is the week. I think if all of a sudden we can get some kind of positive price action in crypto, at least some kind of dead cat bounce or something, maybe Coinbase can see some kind of bounce. I don't know. Riot blockchain, obviously this was overvalued in comparison, and all it's done is just sell off since then. Still looks bad. If we look at the weekly on Riot too, we have crossed the 821 to the downside. We tried to cross it back to the upside. It failed. We're back at it right now. Bears are in control. We have a red slope line. We're trying to save price action right here, but the truth is it's probably just going to roll over. I mean, it's failing right now. I would expect this to retest the 200 exponential or simple over the next few months or whatever. There's still a very high likelihood Riot goes down to somewhere in between $10 and $15. Riot's bad. I am anti-rioting. Well, crypto rioting. Mining. MicroStrategy. It broke out. It failed. It broke out. It's failing. Maybe we see that continuation to the upside. Hard sell signal. Bunch of red histograms in a row. Not to mention, I listened to a Michael Saylor interview. I can't remember what channel it was on, but it was a 2-hour interview with Michael Saylor. And I wish I could debate Michael Saylor. I would absolutely love to debate him because there are so many flaws in everything he says, but he just talks really smart and fast and says educated things, but draws connections that are not actually there. And I think most people hear it and he says it fast enough that they believe his bullshit. But if you look at like the comment section on like any Michael Saylor interview ever, it's like, he's Jesus, he's our savior. Michael Saylor is the best. He's definitely not a scammer. His previous tech company didn't go from $3,000 to $3 and lose 99% of its value. Oh no, wait, that's not an actual comment. That's actually the truth. So that he is 100% a cult leader in the Bitcoin cult of MicroStrategy. So, but here we are, bearish control zone, looking to cross back over on the weekly, trying to cross the 821 back up to the upside, failing miserably. More than likely what's going to happen, a new low on MicroStrategy. Man, this dude is a scammer. He also spent $2.7 billion on Bitcoin, and it's still not even going up. And his company is just rolling over. Poor Mikey Saylor. Pretty soon, he's going to go from our savior to Michael Failure. Sail off into the distance. He'll probably end up in jail or disappearing off the face of the earth. You know who Michael Saylor actually reminds me of? God rest his soul. Reminds me of John McAfee a lot. Like the way he talks, the way he acts. Like, I mean, I feel bad for John McAfee. You know, you could argue that, you know, he made some poor decisions. You could argue that he got Epstein. You could argue a lot of things, but in all reality, that dude like went unhinged and ended up probably taking his own life in a jail cell, broke in another country after doing like hard drugs like heroin and smoking crack live on like interviews and TV channels and stuff. So I think probably Michael Saylor will end up in that same area. We'll see though. We'll see. But there's just like a strange, eerie, like sort of like thing. And and as far as that, while we're talking about it real quick, again, not to speak ill of the dead, John McAfee, obviously very distinguished man, McAfee antivirus, it's great and everything. People are saying he said he would never kill himself. He said if he ever kills himself, come looking for him because he got Epstein. He also said if Bitcoin didn't hit $1 million, he was going to eat his own wiener. So maybe don't believe everything that crackhead heroin addicts say, after they make claims like they're going to eat their own junk. So it kind of takes away from him saying he's not going to kill himself. So maybe he's just like the biggest troll of all time. And he was like, you know what, I'm going to go out with a bang. But anyway, that's enough of that. GameStop looks bad. 821 crossing to the downside. Inside the bearish control zone. Slope line. Multiple red histograms. Divergent signal at the top of the range. GME connect. AMC connect. Buy, sell. Sell, buy, sell. Top of the range. Capitulation inbound. A bunch of red histograms in a row. We're consolidating at the top of the range, guys. We're getting ready to break out. I'm an ape. I've got diamond hands. No, you're not. No, you don't. You're all in on a meme stock, and you're getting ready to get wiped out. So, have fun, Trey. Bed Bath & Beyond. It's just another meme stock. Every time it does the same thing. Goes parabolic, goes sideways. He eventually has a lower parabolic move to the upside. These are all garbage. At least Bed Bath & Beyond didn't go to a new all-time high for no reason whatsoever. But there's a reason. I want to look at something here. There's a reason Bed Bath & Beyond has been dying since 2014 and cannot get above its 200 exponential and simple moving average, which are about to be powerfully sloped to the downside. It's because it's a dying business. Because people would rather order their random things, whatever you buy at Bed Bath & Beyond, they just buy them on Amazon now or on like the internet or from China for cheaper. It is what it is, but that's the truth, guys. That's the truth. Let's go back to AMC. Let's look at AMC Connect. Let's see how that looks. Oh, that's not good. So all of a sudden, we had a previous high in 2015. AMC tried to retest that high in 2016, and then from then it was dying because movie theaters were just dying, and they were becoming worse and worse and worse, and there were streaming services, and nobody was going to the movies anymore, and then finally it became a meme stock, and now it's at new all-time highs. That makes sense, because now all of a sudden, after a pandemic when movie theaters have been closed for months after months after months. Now they're doing better business than ever. There's more people going to the movies than ever. There's no. This is a cult. It's a cult full of monkeys or gorillas or what is it? Apes. It's a cult full of apes. There's a bunch of apes, and right now they're excited because they're having fun. They're throwing poop at each other. They're peeing in each other's mouths, and everything's fun, and it's a fun video on the internet, and it's a short squeeze, and they're diamond hands. But very, very soon, they're going to realize that it's not fun to get hit in the eye with poop. You end up getting pink eye, and you get sick if you drink too much of your own pee, and you're going to lose all your money. So sorry, apes. Diamond hands. Yeah, right. We'll see. Let's see. Talk to me when you lose 90% of your value. Tell me if you're still holding on diamond hands. No, you'll be liquidated because you're probably using leverage. GameStop, same thing as the AMC apes. This thing was dying for years. It topped out in 2007, was the peak of GameStop life, which I can vouch for that. Back in 2007 was probably the peak of GameStop. And then it tried to rival that peak again in 2013. And then since then, all they ever do was just get worse and die and die and die. And right before they were finally dead, right before they finally were dead, all of a sudden, they were injected with steroids and went to new all-time high. Went from $60 to $460. And then all of a sudden, GameStop was, the model changed. Malls were booming. Everybody was buying their video games in person. People were going into GameStop and just loving it. There was more GameStop locations than ever. They were more profitable than ever. The fundamentals changed. The technicals changed. And all of a sudden, GameStop was just revolutionizing the world. Or it's just a meme stock. And it was a short squeeze. They got out of control. And very, very soon, it's going to just go back to its intrinsic value, which is close to zero, or actual zero, or something like that. So what do I expect GameStop to do? Probably lose. I think GameStop goes Michael Saylor. I think it probably loses 97.8% of its value. I think it goes full on MicroStrategy. So we'll see though. Maybe they've raised enough money off of idiot short squeezers that they can actually change their model and they start doing something differently. Maybe they do some kind of online digital thing. Maybe they completely reinvent GameStop and they change everything fundamentally and technically, and then they can be a successful company again for the first time since 2007 or 2013. But probably not. They probably just have a bunch of people that just scammed a bunch of retail people who got involved on a short squeeze that are going to diamond hands. And, that's cool. You could diamond hands. You can hold it down to zero. But just know that every dollar that you didn't take out of GameStop or AMC or Bed Bath & Beyond is in some other person's pocket. So, but anyway, that's enough of that. Let's keep moving here. Let's organize the debate with Mike Saylor. Yeah, right, dude. Michael Saylor will not debate anyone that has half a brain. And the second you start saying stuff he doesn't like, he basically will just not answer questions or whatever. I mean, look at, even when he did the debate on with the gold debate, he'll only debate someone who doesn't understand Bitcoin, who also is old and a gold head that has vested interest in gold. So he can invalidate any arguments you have because he's oh, well, you own gold mines or gold mining stocks, or you're in the gold industry, so you have a vested interest in pumping gold. The same way that Michael Saylor would be well, he has a vested interest in pumping Bitcoin. Me, I own both. I own gold and I own Bitcoin. And I'm educated on gold and Bitcoin. Therefore, I'm the worst person you could ever debate because I could take either side of that debate and win. I could debate for Bitcoin why it's going to win against probably, not anybody, but just about anybody out there. I could win the Bitcoin side against the gold head. I could win the gold side against the Bitcoin head. But the truth is, when it all comes down to it, just look at the Lindy effect. Okay? And oh my God, the most recent interview I heard him talking about, he was talking about
this is a long trade. If you're going to buy Bitcoin and your time horizon is less than 4 years, I tell you don't buy Bitcoin. Well, now you're going to say that? Before you're saying leverage your house, leverage your family, leverage your wife, leverage everything you have and buy Bitcoin. And now you're saying don't buy Bitcoin unless you're going to hold it for at least 4 years? Okay, Mikey. Okay, Mikey failure. How about you use your actual brain? He was talking about if I want to store my money in the virtual new network, I'm going to put it somewhere where it's going to be safe for 1,000 years with a net gain of 200% per year. So you're going to trust something for the next 1,000 years that has existed for 12 years. Okay, let's think about this in just simple terms, okay? If I was going to build a monument or something like that, and I wanted to make sure that monument still existed in 1,000 years, would I pick a site with a house that's built on it that's 12 years old and say, well, the house has been here for 12 years, so it's probably still going to be here in 1,000 years, so I'll build my monument right here? Or would I pick an area where there's like a pyramid that's like thousands of years old and say, well, the pyramids have lasted here for thousands of years, therefore I'll probably build my monument here because the likelihood of it still existing, in 1,000 years is probably better here than a house that's been in another location for 12 years. Because you could build a house on a volcano and it could last for 12 years and then all of a sudden the volcano erupts. But, if you build a house in the middle of or a monument or something, or a house, whatever, in the middle of the desert next to a pyramid that's been there for like thousands and thousands of years, it's probably still going to be there 1,000 years from now. And that's the argument of the Lindy effect. It's like if somebody, obviously this is unrealistic, but if a couple has been married for, 10 years, they're probably more likely to be married in the future than a couple that's been married for 10 weeks or 10 days. So that's the argument, is the longer something has existed, the more likely it is to continue existing in its current state. Therefore, if I was going to look 1,000 years into the future, would I rather look at something like gold that has multiple thousands of years of store of value and has proven itself? Or would I rather look at Bitcoin that's 12 years old and say, this is the best thing ever created. It was made by man, not by God, and man is better than God, and it's already 12 years old and it's the best thing, and every other thing is based off of that thing, therefore Bitcoin will still be around in 1,000 years. Yeah, that's a great argument, Mikey Failure. You are a moron, and only morons believe your bullshit that you're spitting all over. It blows my freaking mind how many people are in the Michael Saylor cult. But you know what, though? That's the thing about a cult is it's all about you believing in something and then other people reaffirming your beliefs. And 100% conviction. And that's why he's so good at it. Because he can pretend, or maybe he's drinking his own Kool-Aid, literally and figuratively, that he 100% believes that. But the truth is, if he actually believes that, he's stupider than I think. If he legitimately believes that Bitcoin is a better store of value than gold, he's an absolute moron. And I can say that with 100% confidence because Bitcoin has 12 years of history and gold has multiple thousands of years of history. So I win. End of debate, Michael Failure. Game over. And then also, he argues the stupidest points. He says gold has miners fighting against it because they're digging the gold out of the ground and then they're selling the gold. Okay? If they really believed in gold, they wouldn't sell the gold. They would just hoard the gold and they would just hold it and they would just keep all the gold. Okay? Bitcoin is different because the Bitcoin miners, they mine the Bitcoin and then they just hold it. They hold the Bitcoin. They borrow more money. MicroStrategy borrows money to buy Bitcoin because I believe in it. I don't sell my Bitcoins. Okay, dude. Literally, Bitcoin miners do the exact thing as gold miners do also. They sell off the Bitcoin after they mine it. Gold miners sell off the gold after they mine it so that they can pay back their shareholders, so they can expand their business, so they can fund future operations. They literally both do the same thing. They literally do the same thing. The difference is there's more volatility in Bitcoin, so the miners try to speculate on when is a good time to sell based on like halving cycles, etc. And then another thing is he talks about like the what was the other one that he was talking about? Damn, I can't think of what it was. Oh, damn, what was it? I can't think of what the other one was. But he made another argument that was just so ridiculous. And I'm like, dude, anybody that listens to you and believes you just thinks that you're smart because you're a rocket scientist and you talk smart about stuff and you have someone that loaned you $2.4 billion. But in all actuality, you're just a moron. Anyway, so let's look at gold, actual gold now. The actual gold chart still looks bad. There is potential that we were putting in a low and then a higher low, and we could continue to the upside. We are inside the bearish control zone. Bunch of red histograms in a row. We have lost the slope line on the daily. Let's look at our, stock to flow. That's the other thing he was arguing. He was arguing stock to flow. That Bitcoin has a better stock to flow than gold. One, no, it doesn't. After the next halving cycle, it will, technically. And two, part of the argument of stock to flow has to do with gold's value never going away. Like, every bit of gold that was ever mined still exists on Earth. Like, it's still here. It doesn't go anywhere. Like, how much of the Bitcoin that was mined is actually gone now? Like, tons of it. Tons of it is lost forever. You hear stories about it all the time. Like, thousands of Bitcoin that people have lost and can never access again. So the stock to flow ratio on gold is closer to something like silver, where it gets used up or it gets lost or something like that. Arguing stock to flow on something like gold and Bitcoin doesn't even make sense. Not to mention, Bitcoin was literally copied off of the actual model of gold. So if I literally tell you, hey, I built a business and it's successful and it makes money, and you say, oh, cool, I built a little mini version of your business out of like popsicle sticks, and like I painted it, so you have like an actual functioning business that's been around for like thousands of years, and I have a popsicle stick diorama of your business. So, and now mine's better because I'm going to take pictures of it and put it on the internet, and now it's a digital version of your business, so now it's better. Okay, dude. Like, it's so ridiculous, the shit that he argues. Like, it's like he doesn't even understand it. It blows my fucking mind. And he talks about how there's like a never-ending supply of gold. No, there isn't. And the majority of the gold discovered on Earth has been mined, and they have not made any substantial gold like findings in like decades. And gold isn't consistently mined, and there's not like a ton of technological breakthroughs that all of a sudden you can like mine gold off asteroids or from the bottom of the ocean or anything like that. Like, there literally is every year like breakthroughs in Bitcoin mining, and the only thing that stops all the Bitcoin from just getting mined faster is the protocol self-adjusting. So if all of a sudden like we get some new microchip or the ability to all of a sudden mine Bitcoin extremely fast or extremely efficiency due to like some technological breakthrough, it takes the Bitcoin chain like 2 weeks to adjust. So in the meantime, that like breakthrough can literally like break the blockchain. Not to mention, you know, I mean, there's just so many things. Like, it's like the argument of saying that, you know, there's never going to be computers that can like break your wallet like passwords, because they'll never get like your phrases. Like, eventually computers are going to be so powerful they can literally just brute force hack your wallet. At which point in time, you know, you just hope that there's people that are able to defend that brute force attack like faster than or more efficiently than there's people able to hack it. But the truth is, like, you know, there's only so many combinations. Like, it's like thinking about a padlock. If you have a padlock and it's 1 through 9, you know, and there's 3 letters that, or 3 numbers that open the padlock, there's only 999 combinations for the padlock. So by adding more numbers, decimals, like onto the padlock, if you then add a 4th one to it, like then it's 9,999 possible combinations. So then you add another one, there's 99,999 pass. But the truth is if somebody sits there long enough with a padlock, if it only has 9 possible combinations and then it opens, you could do it in a couple minutes, because you just try 1, no, 2, no, 3, no, and you go through, and then once you get to 9, eventually you got it. And then if you say, okay, now there's 99 because there's 2 decimals, so I'm going to brute force hack it. I'm just going to try every one. So I'm going to try 1, 1, no, 11 didn't work. 1, 2, no, that didn't work. 1, 3, 1, 4, 1, 5, and it's actually less than that slightly. But anyway, you go through and brute force do it. Well, that's what they do with your private keys. That's what a brute force attack is. So right now, just because there's like 14 key phrases or 24, or maybe in the future there's 100, whatever it is, eventually you can brute force hack it, because computers are going to be so smart that they can bust into all these wallets. And as soon as they start doing that, like, and the older wallets that have been sitting around forever, like Lost, have less CD key, like less words, like key phrase words. So eventually, even if in the future all the new wallets have 99 words, and you have to write down those 99 words in order, and it's going to take forever to be able to hack into them. What about all the original ones that only had 14 words? And now the computer can hack 14 words in, a week, a month, a year, whatever it is. Like, there's so many like wallets out there that are on the blockchain that are just waiting to get brute force hacked. And if nobody has the keys to those wallets now, how are they going to change them to the new style once Bitcoin evolves and the wallets have 50 words? It just doesn't make any sense. So to sit here and say it's going to last for 1,000 years, and 1,000 years from now, we're not going to have computers that can brute force hack those old wallets. Like, you don't think right now there's people trying to brute force hack Satoshi's wallet, like the original OG wallet? You don't think that eventually it's going to happen? Come on, guys. That's unrealistic. I mean, shit, I think, what's his name? Old, not Roger Ver, but his butt buddy. What was his name? Craig Wright. Fake Toshi. He's been trying to do that. I think he put like a few $1 million into trying to like brute force hack Satoshi's wallet so that he could claim to be Satoshi. And when it didn't work, he basically just said, I am Satoshi anyway. But anyway, let's just keep going with our technical analysis. So gold on the weekly, potentially still setting up for that head and shoulders, inverted head and shoulders. We got our left shoulder here. We got our head. We got our neckline. We got our right shoulder. Maybe we get the breakout to the upside. But, honestly, looks bearish right now. We're losing strength. This is a signature we talk about all the time on the TJD TDMACD. We have sold down below the slope line. We came back up to it, tried to break back above it, failed, got rejected, and now we are selling off violently to the downside. I would expect continuation to the downside. We are now getting the weekly cross of the 821 to the downside. We got it back here. We saved it, and then we sold off after we got that cross. We sold off another 10%. So likely, are we going to see another 10% sell-off? And is that going to take us to a new low? I mean, we probably are. From the cross price action, what's another 10% going to do? Oh, look, it's going to take us to our 200 exponential moving average. So is gold going to $1,584? Yeah, it is. But what do I know? I just use technical analysis. I'm not a rocket scientist like some people. A bunch of red histograms on a monthly. We got a hard sell signal on a monthly. We got a thick bearish engulfing candle on the monthly. We got Papa said gold is coming home. But they're printing money and gold, because sound money and Federal Reserve and M1 money supply and okay, little guy, don't hurt yourself. It's okay. I'll get you a little binky to suck on when your gold goes down to $1,500 and you capitulate. Silver is still stronger than gold, but looking weak. The old silver apes. Does silver people call themselves apes too? Or is there a different name for that? I don't know. The old silver squeeze looks pretty good. It does not look good. It has failed to break to new all-time highs. About to get the 821 cross on the weekly. About to sell off. Probably going to retest $22 pretty soon. And then after that, $20. And then maybe $18, $19? I don't know. Looks weak. Looks like another rejection. Looks like rejected. But what do I know? I'm just using technical analysis. I just don't understand what it means to be an ape and an ape squeeze. Monthly looks decent. Still got positive slope. It's trying. It's trying, guys. It's doing its best. But we'll see. XAU to XAG, gold silver ratio. I'm going to switch this over to the weekly, get a little clearer of a picture here. Look, it looks like the 8 and the 21 are tightening, and we're between them. And what's going to happen eventually? If we stay here long enough, the 8 and 21 are going to cross, and this thing's going to burst to the upside. There's a bunch of green histograms in a row. We're above the red slope line. We're about to flip the slope line over blue, and we're about to cross over the zero zone. So what does that mean? it means it's going to take a lot more silvers to buy a gold soon. So we're at 68. We're going to 73. This thing is getting ready to burst to the upside. So one of two things happens, or one of three things happens. I say it all the time. I'm going to say it again. Either gold goes up and silver goes up slower. Either gold goes up and silver goes sideways. Or gold goes down and silver goes down much faster. So one of those three things is going to happen. And based on the gold chart, I would say that gold is going to go down and silver is going to go down much faster. So I will see you at 84 to 90 silvers per gold. So for all the people that were buying silver at 33 to 50% premiums, get ready to get absolutely wrecked. So if you paid $40 for a silver eagle, and its silver's spot price is $28, and then all of a sudden silver loses a bunch of its value and the premium goes back to normal and silver goes sideways to down for a while, you'll probably never make that up. It'll probably, your kids will probably be able to make up that trade, but God, these people are so stupid. And if you're one of those people, I'm sorry. You should have asked me sooner. But this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. But buying silver for a 50% premium is a good idea, and you should do it because silver squeeze. And there's billboards. XPT, that fatty platty, it's trying to hang on, but doesn't look great. The daily looks okay. It's reclaiming the moving averages, 200 exponential and simple. It's bouncing the 377 and the 528, but on the weekly, we got the 821 cross. It capitulated when it broke down from those levels. It lost the support channel. All red histograms. About to get a red slope line on the weekly. Platinum looks like it's about to get crushed. $1,000 on the weekly pretty soon. Hopefully it holds at 1,000. And this is that 1, 2, 3, 4, 5. But maybe it goes as low as like, I don't know, like 8 something. We'll have to see, man. But again, I like platinum. I'm a buyer of platinum. I think it's undervalued. I think $1,000 is pretty good. But I mean, we got there within a couple of dollars already. But I don't know. I mean, high, a low, a lower high, a lower low, another lower high. Are we just going for another lower low? Did somebody get a platinum machine and they're just going to start making platinum out of like clay? I don't know. If you guys hear anything about the platinum machine, you let me know. Because the chart says yes. USAS, not looking great right here. Looks like it's breaking down from key levels. There is bullish divergence taking place. I mean, I would think this thing is trying to move back up, but if gold and silver keep selling off, this thing's going to sell off too. I mean, if we get back up to like $2, we're lucky on this thing. AG, First Majestic, it's probably going to roll over and die. Same thing. ACB, I'm still ambitious on pot stocks. I think we're going to come down here and just put in a higher low. We do still have that slope line blue. I think this is basically just a bullish reset. I think we got a little excited here. I do expect continuation to the upside. I will be adding to my ACB and Tilray positions throughout probably this week, but definitely with like the rebalancing and everything going on, I think I'm going to be pushing a little bit of extra stuff into these. We're bouncing a couple key fib levels on Tilray. I do expect massive upside potential. These are more long trades for me though, honestly. THCX, same type of deal. YOLO, same type of deal. UEC, uranium, selling off violently like we talked about. Definitely expecting this. Definitely looking to add to these positions at lower levels. I do expect continuation to the downside. Although, you know, we could bounce this area for sure. But I don't think we're going to be putting in a new all-time high anytime soon. Bunch of bearish divergence. Overall, still looks good on the longer time frames though. But it looks like we're about to get that 821 cross to the downside. So is it unrealistic to think this thing goes back to $2, which has been our target for months and months and months? Red histograms, cross to the downside, about to lose to 821. I will be buying it up at $2, maybe at $1.84, and I will be super happy to do so. Because uranium moves very slowly, and all of a sudden people like uranium again. That's fishy to me. URA, another uranium ETF, same thing. I expect this thing to just sell off. I do think we'll get a better opportunity to buy some more of this. Cameco, CCJ, Another one, this is a bigger name in the uranium space. It's at 20 bucks now. I expect it to sell back off. We could easily see, you know, some little internal bounces and whatnot, but I really think we're coming back down to this entry down here at like 14 bucks. Bunch of red histograms, getting ready to leave the bullish control zone. People like uranium. I don't like what other people like. I'm a contrarian in many senses, but you know, I'm just early, so I make my money, and then when everybody else is buying in, I'm selling out. So they're buying my bags, and then I'm like, hold these, I'll be back in a minute. And then like 2 years go by, and they're down like 75% on their position. Then I'm like, oh, hey, I couldn't find you, man. I've been looking for you everywhere. I'll take those back from you at a 75% discount. Oh, yeah, for sure. Yeah, I'd love to get rid of these bags I've been carrying for years, and I lost all my money on. I'm like, well, I'd love to buy them back from you cheaper. So we both win. We're both winners. Oh, man. Copper, same thing. We broke down from a key level. God, I'm ready to get out of here. No offense, guys. I'm tired, and I'm definitely clowning hard on everybody. So we broke down from this key channel. You know, put in a lower high. Try to get back up here. I do expect continuation. I expect this break to play out. And, you know, eventually get down here closer to like 22 bucks on the CPER index, copper. I'm not even going to pull up the weekly. Lithium looks strong. It actually is like the strongest of probably like any of these. Definitely has strong fundamentals. Definitely has strong technicals. Moving back up here could potentially be developing some bearish divergence. I would say that could be scary. If we put in a new all-time high, or I don't think it's all-time. Is it? Yeah, okay. On this specifically, this LIT it is. If we put in a new high here, though, that's going to probably develop bearish divergence. Sell by sell at the top of the range. If we come back up here and develop bearish divergence based on both our indicator oscillators, I would then expect a powerful move. This thing could easily get up to like 75, 80 bucks, maybe even 90 depending, and then sell down to like 45. Definitely could. Definitely could. LBS, Lobster Futures, the old Lobster. Lobster is looking rough, guys. We hit our first couple targets at the moving averages, and Lobster is selling off violently. Yeah, it's rough, guys. It is rough. The old wooden lobsters. Yeah, we'll see. I mean, it doesn't look like it's trying to bottom out or anything. It looks like there's definitely going to be some continuation to the downside. We could see lobster way back down here. Way down here. Not a good time to be a shellfish, if you know what I'm saying, guys. $433 maybe? I don't know. We could easily bottom this out here anytime, back down to the 618. I mean, we're at like key support levels, but if these don't hold, man, lobster could violently sell off here. But we'll see. Oh, man. Look at that big, thick red lobster. Jesus. Leaving the bullish control zone. Got that red histogram in the house. You know, this thing could easily just keep getting decimated. This right here, though, that's a scary, scary candle. I would not want to be a lobster investor right now. I would not want to be sitting on a bunch of lobsters. Caterpillar. Okay, so we were talking about this, how I expected basically like a dead cat bounce after the measure move. We got it. We got rejected. It's possible this hangs on and continues to the upside. On like the shorter time frames, we're seeing like some positivity and key level to like bounce. But I do expect this to come back down here to like 200 bucks. I think we front ran those 200 exponential and simple moving averages on the old Caterpillar. But I do not see any butterflies in the future on this bad boy. We have lost the slope line here. The histograms are below it. We have lost the bullish control zone. This is the sell by sell with like a bunch of noise in between. I think that we probably end up losing like 50% of value on this thing. I mean, we could easily end up down here 150 bucks over the next couple months or a year. And last but not least, deer. If you are a venison investor, It might be time to get out, ladies and gentlemen. Does not look good for the old deer meat. We do have the divergence signal, buy, sell, buy. So short term, maybe we see a little more upside potential, but I don't know. I'm not sure we're going to see a new high on this thing. It looks terrible on the weekly. Sell, buy, sell. I trust the weekly more than I trust the daily. And then if we go to the monthly, same thing. We broke down from a key range. It looks like we're just getting ready to put in like a capitulation dump. It's hunting season, and I would not want to be Bambi right now. I think more likely than not, we end up down here at like 240, 250, maybe $200. Yeah, it looks rough. But yeah, that's all I got for today, guys. What did we hit, the 3-hour mark? Oh my gosh, it's only been 2 hours and 20 minutes? Jeez, it feels like it's been an eternity. And if you're a lobster investor, I want to hear about it in the comments section, ladies and gentlemen. If you're interested in lobster futures, the future price of lobster, and you like our lobster TA, I want you to let me know. But yeah, I'm going to jump over in the comments real quick here and going to call it a wrap. Get out of here. If you're new to the channel, make sure you like and subscribe. Always appreciate comments. Always appreciate positivity. Like, subscribe, share with your friends. I had some shellfish today. It was not lobster. It was scrimps, some old shrimp. I hope you had a good meal as well. Hope you enjoyed the TA today. If you know Michael Saylor personally and you think he wants to debate me, I would absolutely love that. What else? I think we're going to call it there, though. Not a lot of activity in the old comment section. Looking forward to the group, though. I will be reaching out to everyone. If we have had a correspondence recently, and I did not I got back to everybody initially, but expect a message from me this week with instructions on how to take the next step into the group. And then basically, I'll give you a contribution address in either Bitcoin or Ethereum and a invite into the private group. And from there will be further discussions, etc. And yeah, looking forward to it, guys. Looking forward to interacting with you guys personally, regularly, and in real time. Although it is fun on the streams, it's much more fun in the group, and I'm really looking forward to it. And the level of excitement and me being able to get like specifics from you, help you with your trading game, help you to learn, get a better idea as to where you're at, what you're interested in, you know, all that good stuff. But I've gotten a phenomenal response. I am extremely excited. I'm looking forward to working with everybody. And also, like, just the amount of people that are interested. I know some people don't like to jump in the comment section or whatever, and it's a little different when, you know, it's one-on-one email or a group like that. So I definitely look forward to interacting with you guys in the group, and we'll be happening in the next couple of days. So get excited. I'm excited. Get ready to make that money. Get ready to learn. Get ready to have some fun in the old crypto trend trading group. And God bless you all. Appreciate y'all for showing up today. Yeah, thank you as well, my brother. Do we have to reply to your email? Do you have to reply to my email? No. As long as we've had a correspondence, which I know we have specifically, Bubblies, you're fine. I will send you, basically what's going to happen is I'm going to send everybody just a general further instruction for what to do to get into the group. So I will either send you a code and then you join the group and then you send your contribution, or I will send you my address and then you send your contribution and then I'll send you a code. I don't know what order those things will take place, but that's basically the next step. You just basically, like, you know, send your contribution and I send you an invite. It's easier probably if I send you an invite first and then you send your contribution, because then we can interact with each other in real time in case anybody has difficulties. But I think most people that are coming into the group have dealt with crypto, are experienced with crypto, not going to have any issues sending it, etc. And again, it may just be the last time I sent Bitcoin, to send $100 in Bitcoin, it was like $20. So it may just make more sense to be like, do it in XRP or do it in like some other useless crypto, just for functionality, so it doesn't get eaten up by fees. Last time I sent ETH, I think it was even worse than that. So Oh no, you're fine, brother. You're fine. Yeah, so good to see you guys. I'm gonna call it there. Appreciate everybody tuning in today. Appreciate all the likes, comments, all that good stuff. Definitely looking forward to the group and getting back together with some of you and getting together with some of you. And then also for a lot of the people who don't have the opportunity to like watch these streams live, but watch them afterwards because of like the time discrepancies, time zones, and like geographical locations. That's also a huge plus for the group as well because I am active like all throughout like the day, evening, night, all that good stuff. So it takes away like that constraint because I do prefer to do the live streams in the evening, but the actual group stuff takes place all throughout the mornings and afternoons as it's much more like time sensitive stuff. I get to interact with you guys like personally like throughout the day. Post my trade setups as I'm potentially taking entries, exits, taking profits, all that good stuff. Tell you what I'm looking at. You can tell me if you're seeing something in real time, all that good stuff. So, but do remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Our kits, maybe we could pay a few months in advance to offset the transaction fee. Yeah. I mean, I don't really. Yeah, that's fine too. Exactly. Like, I don't care if you make a larger contribution up front or whatever. There's tons of ways we can offset that. It's not that big of a deal. I mean, it's just honestly stupid to waste 20% like to transfer crypto right now. So I can't remember who it was like sending me XRP before, and it was honestly like, to tell you the truth, I'm not an XRP fan. I think it's total trash. It's like pretty much like a scam. It's not going to take over like the banking system. It's not going to dethrone Swift. It's not going to get adopted. But the truth is, it's fast and it's cheap. Like, it really is. So it actually makes sense to probably have you guys send it to me in something like XRP or something like that. But again, like, I mean, I can't liquidate that XRP fast enough because like it could be at a penny tomorrow. If it was up to me, it would be. So, but anyway, yeah, definitely we'll figure something out, man. And again, I'll probably just send out the invites to all you guys, and then just have you take care of like the contributions or whatever after that, just because it's easier to go back like on Discord like in real time than it is to be like messaging back and forth with email and whatnot. So, but yeah, I'm gonna call it there, guys. Everybody have a great night. Not financial advice, not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. Crypto trend trader, and I'm out of here.